Good morning, ladies and gentlemen, and welcome to what promises to be a very vigorous and exciting conversation this morning. My name is Andile Khumalo, and I will be your host for the morning and also sharing the stage later on as we get into the detail of some of the panel discussions we will be having. I'd like to also extend a special welcome to those of us that are still enjoying the benefits of working from home. And those are the 320 people that are watching this session online. But also, thank you to everybody that's physically here in the room. I fall definitely on this side of the argument in terms of working. I much prefer to deal with human beings in person. So I'm so happy to see you guys all with your very bright smiles. Early morning, I met a couple of you guys at coffee, and I can tell that we've got the right people in the room who will be part of this very important conversation about how we strengthen South Africa's green economy. It is, of course, the Financial Made Green Economy Conference. It is brought to you by Old Mutual Investment Group. You'll be hearing from them in a moment. The managing director there will be talking to us a little bit later on about their own initiatives insofar as advancing a green economy in our own country. But they don't come alone in putting all of this together. They're in partnership with ACID, Coca-Cola Beverages Africa, FNB, Scatec, Standard Bank, Hohm Energy, Heineken South Africa, and the Glass Recycling Company. And I've checked with the Heineken team. They did not bring their beers with us this morning. But however, I have arranged that you can get a case of the 0% if you really insist. The global focus on achieving sustainability imperatives that provide businesses with a social license to operate are similarly gaining momentum here in South Africa as they are around the world. Building a green economy where corporate South Africa conducts its business in a sustainable manner would leave the planet and its people in a better place. This is something we are all aspiring to and is fast becoming a necessity for ensuring the right kind of sustainable investment even. The big argument around ESG, the big argument around sustainability seems to have come from certain quarters. Those used to be people that are more concerned about the environment. It later seemed to have come from investors, funds all around the world saying, what is your strategy on sustainability? But I certainly get the sense that our customers, our employees, our people, just day-to-day living, because of the scarcity of the natural resources that we have across the world, it's become a bigger issue. It's no longer about, certain funds want to invest in you if you are operating on fossil fuels, or people, you should care about the environment because of global warming. It's now becoming an everyday consumer day-to-day requirement. And today, we're going to unpack this particular shift. We're going to get into the details of why it's important for manufacturing businesses to start looking at cleaner industries, every business to start looking at more sustainable energy solutions, and how we can all realize this quest of sustainable economic growth, competitiveness, and something that's particularly sensitive in our own country, and that's inclusion. How do you make sure that you take everybody along in this conversation? Our program will kick off with a keynote address from our main sponsors, Old Mutual Investment Group. And then we're going to have a presentation, of course, from two panels. The first panel will be hosted by none other than financial journalist and SABC business anchor, Nastasia Arendse, and she will be tackling the first panel. And then after the comfort break, I will then come back and moderate the second panel before we wrap up and close. Just some housekeeping rules. For the guests in the room, please put your phones on silent or off so that we just don't disturb anybody or the program. As you know, we're streaming this live, so we'd rather not have any interferences to that extent. For those who don't know yet where the ladies and the gents are, as you exit the main venue here, there's glass doors you'll find on your far right past the stairs. That's where the ladies is, and the gents is around the same area as well. We do have Wi-Fi for the room, for the people in the room. The Wi-Fi name is FMG Economy, and the password is FM Green 1. That's FM Green 1. So you can use that Wi-Fi. And please, I encourage you to share to your social media platforms for those that are that way inclined. Any outcomes, any quotes, anything that's been said, anything that kind of grabs your attention for the day. And the hashtag I'd like you to please use is hashtag FM Green Economy. Hashtag FM Green Economy. That Wi-Fi password again, the name of the Wi-Fi is FMG Economy, and the password is FM Green 1, the number 1 at the end. Right. We're also obviously going to be having a Q&A session For those guys who are joining us from the offices or at home, you do have a Q&A button at the bottom of your screen there. Please type away your questions. Both Nastasia and myself will be getting those questions sent to us electronically on stage. So we'll have every opportunity to take your questions and putting them also to the panel later on. For the guys in the room, we're going to have roving mics, the old school way, the human way, because we're all here as human beings. So there's going to be microphones being sent around the room for asking questions. And please, let me encourage you, please ask questions, because the panelists that are here are going to share their own views. They're going to share their own experiences from their various companies about how they're contributing to a South African green economy. But you may very well have your own contribution. So it's not only for the questions, it may also be just for contributions. So please do participate, as we've allowed for a lot of time for an engagement. We don't want this to be a lecture from the podium to you. We want it to be a discussion that also includes you. Right, let's get the show on the road. And first up, as I've promised, please join me in a warm round of applause in welcoming on stage our keynote speaker. He is speaking on the theme, Allocating Capital for a Future That Matters, how investment managers can drive impact through the listed market. Of course, he's none other than the Managing Director of Old Mutual Investment Group, Mr. Tebogo Naledi.
I never kissed a mouth that tastes like yours. Strawberries and something more. Ooh, yeah, I want it all.
Good morning, everybody here in the room and online. Firstly, a big thank you on behalf of Hohm Mutual Investment Group for allowing us to participate in an event like this. This is a conversation that is very important to us, and most importantly, very important to our clients who we actually represent. The topic, as Andile has mentioned, that I'll be speaking to is allocating capital for a future that matters. And it's really speaking about how investment managers can drive impact in the listed market. There are numerous investment managers in our market. We are just one of them. And so perhaps as a first disclaimer, I'm going to speak about how we, as Old Mutual Investment Group, think as an investment manager. I think other managers may think similarly or may think differently, but certainly I would like to share with how we think about these issues. The focus is on the listed market. And why the listed market? And perhaps before I kick off, just to give you a little bit of background on our own business, we are one of 5 asset managers in the Old Mutual Group. Our focus is on listed assets, particularly listed equities in the global space, in the emerging market space, and in South Africa. We do have other affiliate companies that focus in, unlisted investments. Some of my colleagues, Sichaba and Po, are here. They're from our infrastructure team in a different business and other areas. And so our focus is really on the JSE companies. And as you'll see, I'm going to be focusing on how we are engaging those companies in driving issues that speak to sustainability. But before I do that, I thought it would be useful to kind of have a bit of a look at the backdrop of this. So I'm going to just look through a few slides where we just chat through a few issues on the relevance of this issue and where we're coming from. And as we all know, this is a very central discussion in our economy, in our society. Andile has alluded to that in the introduction. You can see various headlines there speaking around different topics and issues, but really centered around the climate finance element of it. Late last year, international partners, being the UK government, the US government, the German government, France and the European Union, collectively committed to investing about 8.5 billion into our plans to transition our economy. It's about 130 billion rands. And that amount of money and that program is forming part of what we have developed as our own Just Energy Transition Investment Plan. This is a 5-year plan where it's been identified that there's a need for about 1.5 trillion rand of investments over the next 5 years that needs to go into the space of transitioning our economy into a lower carbon economy. And so that 130 billion is actually quite a small amount if you think of the ask here. That 1.5 trillion, 70% of it is into electricity and how do we decarbonize electricity. 20% is into the green hydrogen space. I think some of you in this audience are involved. And about 10% is into electric vehicles. So these are meaningful industrial interventions on how we transition our economy. And these are big numbers. And right now, there is this shortfall, so to speak, of capital that needs to be raised and mobilized of in excess of R1 trillion. And that's where our clients come in, right? So we are representing them, and we need to have a view on how we engage with this. So I think members of this room will be aware of this backdrop. And it is very relevant to us, right? Because we have been very much a part of the climate conversations for a long time. Our own government and its different departments have tackled this from different areas, but we ourselves have determined our own nationally determined contribution in terms of the glide path that we think our economy should follow to decarbonize while thinking about social issues, thinking about a just transition, and what that looks like. And this kind of captures it a bit. It's quite a busy slide, but this is kind of the climate action tracker used by multiple countries around the world to assess where they are in terms of carbon emissions, where the targets are, and where the current policies or policies that are being contemplated can influence the trajectory and direction of travel. And as you can see, as South Africa, currently our economy has got emissions of about plus minus 500 metric tons of carbon that are emitted annually. The target that's been determined through this nationally determined contribution for us to get to a world where we can contain global warming below 2%, and ideally below 1.5%, but at least between 2%. The target that's required is for us to get by 2030, which is not that far away, our carbon emissions. We need to reduce those from the current 500 to about between 420 and about 360 metric tons of carbon dioxide being emitted. So it's quite a big shift that needs to happen in a short space of time, in 5 years. And hence you've got this just energy transition plan, capital needs to be mobilized. Those of us, and I'll share a bit of that, who are already deploying capital on behalf of clients, we need to up our engagement with the economy, with the companies we're investing in, around how they are also going to make a contribution to the reduction of our carbon footprint. And as we sit right now, the current policies we have actually don't do too much, right? So if we do nothing, we kind of pretty much stand still. There are a lot of economic growth assumptions within this, and those are updated quite regularly. But even with the challenges we have with load shedding and our economy being not performing at its optimal levels, the current trajectory is just not going to get us there. So we do need interventions. And the planned policies like the JET IP and other policies are really, they are modeled very much to get us there, if we can implement, which is often our big challenge in our country. So we need to do something, and we need to do more. There's a global context as well. For 28 years now, almost, the world has been meeting on an annual basis to have a conversation around our climate challenges at COP. And the conversations are increasing in intensity, increasing in the science that's there, increasing in also how other agencies are coming, have gotten in there, other scientists have gotten involved in modeling properly the kind of carbon trajectory that the world needs to follow over the next, call it 20, 30 years. And they have determined, and I will trust the scientists, that 2050 is the year where we need to have our economy globally emitting, having net zero carbon emissions. So that's still far away, right? But as I showed you a bit earlier, we already need to be implementing plans that are going to make a difference in the next 5 years. So even though we've got a 2050 target, let's realize that there are actions that are required right now. And so it's not just our context, there's a global context. And it's also important for us from a trade point of view, right? In that because it's a global conversation and there are policies that are being evolved and changed around the world, some of our major trading partners are also changing a lot of their policies and changing the kind of businesses and industries and economies and countries that they're going to trade with based on the carbon footprint of those businesses, countries, and industries. In the EU, there's a taxonomy now that's classifying those very businesses and classifying carbon emissions And that is going to translate into policies on trade, for example. In the US, where this issue of responsible investing and ESG is very politicized, there is a conversation still happening there as well, right? In Congress, there's the Green New Deal, a congressional resolution, which is around the climate journey of the US. So important global conversation, but for us, super important because, as I say, these are the people we trade with. And if they're not going to trade with companies, industries, economies that are not meeting their requirements in terms of carbon emissions, that's going to be a major challenge for our economy, a major challenge for our people, for employment, social issues. And so, the world of finance really does play a critical role in this. In a way, ESG investing in our world in 2023 is no longer a side issue, it's no longer a niche issue, it's no longer something that some managers believe in, some don't. In fact, the majority of capital has signed up to saying that we need to, in the way we invest, we need to be thinking more and more about environmental issues, social issues, governance issues, and making those decisions. And this is illustrated quite well in this chart here, which is from the United Nations Principle of Responsible Investments Initiative. This was an initiative started by the former Secretary General, Kofi Annan, 2006, drawing in asset managers, asset owners, into signing up to integrating ESG. And as you can see, there's been massive growth. As we sit now, in capital terms, there's about 120 trillion US dollars that has signed up to saying sustainability matters and the way we make decisions must be consider environmental and social issues. And we have almost 4,000 asset managers and asset owners that have signed up to this. Hence my statement to say, actually today, this is now more an issue that is the norm for investment managers than is the exception, and we have to engage with it. And there are various initiatives following from this, where asset owners and asset managers have come up to say that we are really committing to signing up to a more sustainable world. And some of these initiatives, one of which we have signed up to as Old Mutual Investment Group, the Net Zero Asset Managers Initiative, set targets not just for 2050, but there are interim targets that are set. There are interim interventions that are required to get us to the long-term goal of net zero by 2050. And so it does, as I say once again, allude to the fact that we need action now, we need engagement now on the issues that speak to sustainability. And the policy environment has also shifted massively, right, in response, right? So there's a need in terms of environmental, in terms of, the science, right? There's a need in terms of, our global trading partners in a global context. There's a need in terms of asset owners and asset managers have signed up to this. And there's also a need because, the policy environment has changed and is changing massively. This chart is showing the different policy interventions across the world around issues of sustainability. This is where regulators, policymakers are changing laws and incorporating these issues. And as you can see, it's been exponentially growing over the last 20 years. And why? Because actually it's also been determined that there is actually a fiduciary duty that investors have. Those investors who are looking after other people's money, like pension funds, like medical aids, like insurance companies, they actually have a fiduciary duty in terms of law to consider ESG issues. And this has been tested. It was tested internationally, and there's a fiduciary report from the PRI which unequivocally says, from a legal point of view, there's this fiduciary duty. In South Africa, Just Share teamed up with law firm Fasken, as well as an NGO, Client Earth, to also test in terms of South African law, is there a fiduciary duty that investors have to consider environmental risk in their investment decision-making? And the unequivocal answer was yes. Now, this is a legal opinion, but the regulator seems to agree. So our own regulator, the Financial Sector Conduct Authority, in fact, it goes back to 2011, when there was still the Financial Services Board, amended the Pension Funds Act to say that in making investment decisions for pension funds, we need to consider environmental, social, and governance issues. And in 2019, they updated that with a guidance note on exactly how pension funds should be doing this. So it's not just that the world requires it, it's not just that it's a smart thing to do because we trade with the world, but actually it is a legal requirement for many of our clients, and they do have this fiduciary duty. A conversation like this cannot be complete without talking about the concept of greenwashing. Because as you can imagine, with all these policy interventions, there's growing demand from investors to see managers incorporating ESG. There are many who will do it genuinely, and there are many who will pretend to do it when there's actually, if you look under the substance, there's something missing. So there was a famous case that was reported last year, DWS. It's one of the large asset managers in the world. It's owned by, 80% owned by Deutsche Bank. And one of their former executives, after leaving the business, went and disclosed that, this company says X percent, I think 50% of their assets under management integrate ESG. And that's not true. And so the German regulators and the police one morning woke the staff up very early at DWS and spent the morning with them. They went to the Deutsche Bank, the shareholder, and spent the morning with them to try and understand, are you actually integrating ESG issues or not? So it's not even a nice to have, right? As I say, there's a fiduciary duty, and if you're going to be claiming to do it, there are even regulators who actually are interested in seeing, are you doing it? These last two slides are the last two slides I'll share in talking about the background before I get into what we do. And I find them to be very interesting slides. So a bit of background. So this was a protest that was happening in KwaZulu-Natal. The other slide is right here in Johannesburg. And as you can see, it's people who are protesting against, for, let me say for, not against, but for climate justice, for renewable. And if you look at the people who are protesting there, it's people who represent a very important demographic in South Africa, in Africa. A demographic that is the largest population-wise, a demographic that is the most vulnerable from many, many aspects. And so why would they hop on and say, hang on, this issue is also important for us? Because so far we've spoken about the EU, about the UN, we've spoken about big bodies, we've spoken about capital, about asset owners, asset managers. But here are people on the ground, the most vulnerable in our society, also saying this issue is important because they feel the brunt of climate change, right? And we've seen it in KZN with some of the floods, where the people who are most impacted were very much, some of the most vulnerable people in our society. And that's where we are, folks. We're in this space now where lots is happening, lots is shifting. There are global conversations, there's local. There's a need, it's coming from all different places. And so here we sit as Hohm Mutual Investment Group. We manage 420 billion rands of assets on behalf of clients. These are clients who are policyholders through Hohm Mutual, pension funds we invest, people like yourselves who have invested in unit trusts we manage, right? And so our responsibility with this world that we live in is one which is quite a big responsibility and one which we take seriously. And so as Hohm Mutual, we very much believe in responsible investing. One can approach this from different ways. There are some managers and some economies where they've chosen to take the decision that we will not invest in fossil fuels. We will not invest in companies that have got high carbon intensity. So we will disinvest and we will stay away from those companies. And that's how we're going to change the world. We've taken a different view. And it's partly informed by the fact of where we are located. We're in South Africa, we're in Africa, we're an emerging market. And in as much as we definitely think that it's important that we transition into a lower carbon economy, as we've said, we believe it, there's the science, there's policy, our clients want it. In as much as we believe we've got to do that, we believe we've got to do it recognizing that there are real world issues that we also have to be tackling as we're doing that. And to simply disinvest from companies and walk away as a South African asset manager is not helpful, in our opinion. And I'll show you what we do think is helpful and what we do. And so far, I think it's making an impact. And I think some of the members of this audience, this may be useful for yourselves. You are companies that our clients invest in, and we engage you on behalf of our clients. And I think that hopefully this will help you understand the issues that are important for our clients and that we need to engage you on and why we engage them. So the way we approach responsible investment at Hohm Mutual, firstly, is around asset deployment, right? We have about 150 billion rands as a group that's invested in what we call developmental type of investments. And in terms of the current taxonomy, about 80 billion of that is invested in green economy assets. So that's quite scalable in a massive way. And this ranges all the way from actual investments in projects, be they solar investments, being generation, be it into impact areas, be it into ESG rated companies. Right? So quite substantial capital. So actually making the money, putting the money to work to get us to a sustainable world. The second area which we focus on is ownership. Because as I said, we're not going to disinvest from companies because they are fossil fuel companies or high carbon emitters. But we're certainly, on behalf of our clients, going to be active owners, meaning we talk to these companies. We talk to their boards, to their management. We drive policy changes. We monitor those policy changes. We hold them accountable. We look for remuneration policies to be aligned to outcomes that speak to ESG agendas and decarbonization and social issues, etc. And we think that's where we can make the most difference, right? And this is the most difference in a context where we are ultimately appointed to give our clients returns over the long term. But we do believe that issues of sustainability and resilience are an important component of our delivering those risk-adjusted returns over time. So our approach, as I say, we deploy capital and we actively engage. It's not a matter of disinvesting from companies because we think we can make a difference. I've spoken to this already, that as Hohm Mutual Investment Group, we signed up to the Net Zero Asset Managers Initiative, and that's a global initiative of asset managers who are saying that they will look to actively engage in how they transition assets to a net zero world by 2050, following interim targets. And so for us, we've signed up to the Net Zero Initiative, but our focus, and in the companies that we're engaging with, is around the just transition of it. And the just bit is super important. And I thought I'd share with you as an audience what we mean by just, how we define just. It's how, as we decarbonize our economy, we can ensure that workers and communities are retrained, their skills are retained or redeployed, or they're compensated for the changes that come through that are affected by decarbonization. Ideally, we want the decarbonization initiative to be something that adds value and starts to help address some of our social challenges, like job creation, like retaining jobs, like skilling up. And we have already, working with our clients, determined that by 2025, at least 24% of the assets under management in Hohm Mutual Investment Group will be managed along these lines of the net zero initiative, along that just transition to net zero. So that's an interim target, and we'll continue to engage companies, and hopefully we increase it. But we can see that already the assets we have are already speaking to this agenda. There are two other areas which we do focus on where we can drive impact in the listed market, and we believe we'll drive impact. The second one is water. Other than outside of electricity, water is our second biggest crisis in South Africa. Being a water scarce nation with unreliable rainfall, this is a major issue which can have major socio-economic and economic impacts. And so we engage a lot with companies around responsible water usage, because we think that that is something that, as I say, can have major impacts on our economy and on communities. And then the third element is on inequality. And inequality, the different ways of defining it, right? Statistically, South Africa is the most unequal country in the world. This is measured with a statistic called the Gini coefficient, so that's a fact. We live it, we can see it, we feel it. But for us, as I said, being investors in listed companies on the JSE, where we feel those companies, can respond and join us in not just the just transition, but also just water, it's in how we address inequality. And in the corporate setting, the issues we're looking at are issues around employment creation, employment retention, around decent wages, around the ability for people through skills development and other areas to progress in their careers. Because it is important to progress to gain higher incomes and reduce inequality. It's important to look at gender and racial pay gaps as well, and we are pressing a lot of companies to disclose more around gender and racial pay gaps. And so as you can see, all of these three issues, I mean, there are many other issues we'll engage companies on. These are the three that we have prioritized as a listed equity manager, where we feel in talking to listed companies, we can make the biggest difference around driving this concept of impact. And as I said, it's really talking about things that are just, recognizing the real world, material issues, stewardship, and collaborative. In speaking to our target of 24% of assets under management, I wanted to highlight now in the real world what we're doing. If you look at the JSE and you measure its total carbon emissions and the carbon intensity, there are 10 companies listed on the JSE that account for 80% of carbon emissions. Right? So let's reflect on that. So 10 companies account for 80% of the carbon emissions from the JSE. So being investors in this space, if we're to focus on those 10, we could have quite a meaningful impact, right? And so we are putting a lot of our efforts around those. And who are those 10? That is the real footprint. Well, of that 80%, 40% is actually one company, Sasol, right? Sasol and Eskom actually are the biggest carbon emitters in our economy. If they were to transition, in fact, everybody else can kind of pretty much go along, right? But everybody does need to transition. But that's how big Sasol is, and I think globally, one of the biggest carbon emitters. The other 9 companies, which actually all have another thing in common. They're all mining and resource companies. Very important in our economy, and as you can imagine, very energy intensive, and in terms of environmental impact can be quite significant. And so our focus is on these companies, but there's a context, right? As I said, we're not going to disinvest from them. We're going to engage them. And the context is that these companies are also very socially important in our society. Sasol employs just under 30,000 people. If you look at our mining sector, we employ about 450,000 people. And if you look at Sasol itself, and I want to zoom in a little bit on that, is that it is an entity that actually has quite a significant social impact in South Africa. Sasol is one of the large corporate taxpayers. As I said, it's a large employer, pays just about 34 billion in wages last time we measured this. It is a funder and provides finance to many black businesses, many women-owned businesses, and is a big part of our economy, almost 4% of GDP. So to simply say we're going to disinvest from Sasol is not the way in which we can ensure there is a just transition. We can ensure that all the, not just the decarbonization issues, the inequality issues that I spoke about, and all the other issues of responsibility are not addressed by simply disinvesting from a Sasol. So what do we do as a listed asset manager? Is we engage. And in fact, I'm very proud of the work that our team has been doing since 2016 in having very intense engagements with Sasol management, with the Sasol board, around the policies, around their own decarbonization journey. And I'm pleased to say, as we sit now, actually, and it's reflected in the last AGM, where actually we voted in favor of all the resolutions that were tabled, because we've gotten to a stage now where Sasol, and we'll continue to engage and work with them, we believe has got the policies and plans over time to decarbonize and ensure that there's a just transition. But as I say, it's not a matter of it's done, we sit back. Engagement is continuous. And so we will get to the carbon targets, but as I say, all these people who are impacted in the real world, we will be trying to ensure that the companies are thinking about them. It is an interesting space that we're in right now, because we are having these conversations as corporate South Africa, as fund managers. There are many people out there who feel excluded from these conversations, and I think some justifiably so, and it's important that we start to include everybody within our conversations. But I think it's also important that we start to co-create the solutions together. And I think this is co-create as all sectors of our economy. This is quite, given everything I've said now, you would expect everybody would be on sides with the decarbonization journey, with the just transition journey. But as we know within our society, not everybody's on sides. And it's important that we really do bring everybody on sides. This was an interesting protest where workers were out of fear, right, of the impact on themselves, loss of work, loss of jobs, anti, the introduction of renewable energy into our ecosystem. And I think that for me just highlighted that there's a need that we talk and more inclusively around how we are transitioning with every sector of society. And that's an important part of sustainable development goals, right? So the one backdrop I have not given that's also very relevant is that we as South Africa and the world, we have signed up to sustainable development goals, that by 2030, we'll have achieved some of the targets that are there. Ambitious targets, the first one being zero poverty, right? But the last SDG there speaks about partnerships for this. And that's really going to be my closing remark, is that I've tried to share with you, hopefully, it's quite a lot of content to cover, the importance of this conversation in terms of science, the importance of this conversation in terms of global conversations, and those that will impact us as a major trader with the world, conversations around the policy environment and how it has changed massively, and we have to respond. Issues of sustainability and integrating that investment decision-making are actually increasingly more the norm than the exception. And it's issues that all sectors of our society, even the most vulnerable, are saying we need to prioritize and put more effort around. And that's really the role that we try and play, working with partners, but we do definitely believe that it's a space where partnership for goals are really critical in how we integrate our governance, our environmental issues, and our social issues. So I'll pause there, ladies and gentlemen. Thank you very much for allowing me the time to share those remarks. And I hope I have given you a flavor of where we try and make a difference, what the issues are, we want to work with you, want to work with our clients, our investors, in how we tackle these issues and get to this desired world of a just transition, to a lower carbon economy. With those, thank you very much for the.
Wow, that was really, really, really enlightening. Thank you so much, Tebogo. Yeah. I love the case study on Cecil. I'm involved in a piece of work, in fact, with Arena around ESG, and I've always felt that the conversation around sustainability and how we measure companies and how we almost, shall we say, polarize the conversation about the good guys and the bad guys. It's like it's a reflection of society today. If you're not woke, you're not cool anymore, right? And suddenly, like conversations that were pretty normal to be had 10, 20 years ago, now they're taboo. And if you don't roll with that school of thought, you're not cool and no one wants to talk to you. And it's kind of similar with sustainability. You've had these companies for all these years. They pay taxes, they contribute to fiscus, they employ people. And now that sustainability has become a global kind of phenomenon, rightfully so, we kind of have this conversation in a polarized way. The good guys and the bad guys. So and what Tebogo was highlighting is absolutely correct. How do we make sure that transition happens? Because these are still big employers, these are still contributors to an economy, they're still important companies. We got to talk about how to get there. We're not like they're suddenly bad people now, and suddenly, I don't know, some renewable energy business is now the good guy. We got to think a little bit more creatively than that. So thank you very much, Tebogo, for putting things in perspective. Speaking on matters of sustainability, next up, I'm bringing on stage a man who works for an exciting business that connects customers with accredited solar providers, also provides them with product suppliers, and most importantly, does something pretty unique, which is providing them with financing all on an online platform. He's going to be speaking on the theme of the state of the national utility post-SONA, state of disaster, and post-budget speeches. Please put your hands together for the head of PR and business intelligence at Hohm Energy, Matthew Cruz.
Hello, everyone in person, and hello to all the viewers joining us online. My name is Matthew Cruz, and I'll be talking to us today about the state of Eskom and a 5-year load shedding projection. And hopefully by the end of this, you'll have a good understanding of where we're going to go with load shedding over the next 5 years. So who am I to talk to you today about load shedding and Eskom? I worked at Eskom for 11 years. And in the last 2.5 years, I was a management consultant to the board and C-suite of Eskom, talking about the state of Eskom and then the future of the energy sector in South Africa. I also wrote an MBA dissertation on the topic. It was titled, Eskom, Too Big to Fail or Necessitated Change? And what we're seeing now is almost forced change in the country away from Eskom. And I work at Hohm Energy, which is the South Africa's solar marketplace platform, and I'm the head of business intelligence there and head of public relations. And our mission at Hohm Energy is to accelerate the clean energy transition in the fight against climate change. Okay, so to jump right in, the key thing I want you to take away today is that load shedding and the price of electricity are both projected to double over the next 5 years. It's quite a significant statement. It's difficult to imagine. Starting with the price of electricity, this has taken place over the last 5 years. We have had a doubling of electricity. And the main reason is that both Eskom and municipalities get close to an inflation-based amount of increase year on year. So Eskom will get an increase. In the big announcement from NERSA recently was 18.65% for this year. And then separately, municipalities will also get an increase this year. That's typically around inflation. And if you have a 15% increase year on year for 5 years, you double the price of electricity. So in 5 years, we'll have double the price of electricity. Diesel costs and the cost of coal that are going to be increasing over the coming 5 years will also contribute to the cost of electricity increasing. So yeah, price of power is going up. When it comes to load shedding, for the medium term, we have a whole bunch of old power stations coming offline and haven't really seen this being discussed too much in the media. The 5 oldest power stations coming offline equal about 8,000 megawatts worth of capacity. And to put that into context, our peak load in South Africa is about 32,000 megawatts during the evenings. So it's about a quarter of our current demand is coming offline. And when we look at what's coming online, it's taking some time to come online. And what is coming online isn't necessarily going to be providing power in the evenings and the mornings, because it's focused on solar and wind, which is quite intermittent. So, looking at how things have gone in the country with load shedding. I like to measure load shedding in gigawatt hours because it measures the volume of electricity. So 1 hour of stage 1 load shedding is 1 gigawatt hour. 1 hour of stage 6 load shedding is 6 gigawatt hours. Usually we see in the media load shedding being communicated as the hours of load shedding been increasing. And if we just look at hours alone, we saw a 3.3 times increase last year in the length of load shedding. But it's more important to look at the volume, because this is what really impacts the economy. Stage 6, is very different for a day of stage 6 to a day of stage 1 load shedding, estimated to cost the economy 899 million rand per day when you're at stage 6, and stage 4 is about 400 million rand per day. So overall, we had a 4.7 times or a quintupling of load shedding between last year and the year before. It really was the breakout year. So we had a kind of increasing trend over 5 years, and then we just had a breakout year. That was to the end of last year. January, unfortunately, we had more load shedding in total than in 2021 combined. So that looks like a 12 times increase over a 12-month period of load shedding. It's like a multiplier for every month. And if we look at analogies, we could say 2021 was going at the altitude of a Boeing 747. Last year, we were going like a rocket ship, and this year, we're going like a Elon Musk Starship. So we're really taking off. We also had a whole bunch of information that was shared with us over the last 12 months. and revelations that have come about regarding Eskom and the state of things in the energy sector. So one of the big announcements and shocking revelations came from Andile in his interview on ENCA, implicating and inferring that 2 ANC senior ministers were involved in widespread corruption in Eskom. The new electricity minister that was announced has minimal experience in the energy sector. I personally do not have confidence in him, as it is not immediately obvious to me whether he understands the difference between a gigawatt and a gigawatt hour. So considering that it took Andile a year to get onboarded as the CEO of Eskom, I don't see too much happening as a result of this new minister, electricity minister, coming into power or coming into his position right now. We were leaning on hopes of the new power stations, Kusile and Medupi, coal power stations coming online to provide us with lots of power. And unfortunately, bad news after bad news comes out of those power stations, where we see half of the newest power station, Kusile, is offline due to a chimney failure. And not doing too much better at Medupi, we had a Unit 4 explosion, so we only have 5 units that will be operatable at Medupi, and that's for the next 2 years. We won't see any change coming from those power stations. And this is very concerning from power stations that we paid twice the amount for that was originally budgeted, and we waited 3 times as long for. You would think that we would have the most excellent power stations in the world as a result of waiting so long and spending so much money. But actually, they're performing at about half of what you would expect them to perform at. Those are the new power stations. The old power stations, unfortunately, once again, bad news. We've had a 6-year decline, consistent decline, of the energy availability factor at those power stations, where now we're sitting at a point where we have only half of the generation capacity in the country actually providing power to the country. So we have only 50% of energy availability factor. So of all the power stations that are on our grid, only half are actually functioning. Yeah. So this is one of those things, either you laugh or cry, you know. To compound to that, we have grid capacity constraints, which was highlighted by the CSR in December, where they highlighted that the grid is constrained between the north of the country, or south of the country, and the north of the country. The south, where most of the wind resources are and wind can be installed, there's already oversubscribed connections to the grid. So half of all the REIPP bid window 4 and 5 and 6 capacity is not being met. We can basically say that the bid windows 5 and 6 have failed because they're only going to be putting on half of the capacity. Due to this grid constraint alone. And that grid constraint is going to take about 10 years to solve, and that's part of the large amount of money that we're using for the Just Energy Transition Plan, Just Energy Transition Investment Plan, is going into grid infrastructure so that we can accept power into the grid from IPPs, but that takes quite a while. A reminder that bid window 5 and 6 is what was announced by Cyril in July last year, in the middle of the year, as part of the energy crisis plan. He doubled the overall capacity for bid window 6 from 2,600 to 5,200 megawatts, and what's going to actually come on the grid is about 1,300 megawatts, so half. Suffice to say, I do not see much positive results coming from the energy plan that is being enacted by the government, announced by Cyril, and now being implemented by the electricity minister. I don't have much confidence in that plan because primarily I don't see any announcement from the government about large-scale generation capacity coming online funded by government. There's a hope that we all will come to the party in this room and online, and all the private sector players will come and will put power onto the grid. It's a hope because no one right now can tell me what the price of electricity will be in 3 years' time. We determine the price of electricity every 2 years at NERSA. There needs to be a massive reform in legislature, and NERSA needs to be reformed in order for us to be able to confirm this is the tariff that we'll be able to provide for you for the next 20 years. There's therefore a lack of proper incentivization, in my opinion, for the private sector to become onto the grid. And so we see a lot of the money that's coming from international funders to South Africa, being either grants or concessional loans. There's no kind of investment of capital for long-term financial gain, really, that we're seeing. So we want to see more of that. And hopefully the people in this room will come to the party for that. And lastly, in 1998, the ANC government announced that Eskom will be unbundled and will go towards the energy state, or the energy sector state, that's seen in all first world countries, of a democratized energy market and a free market that ultimately drives down the price of electricity because it drives excellence. Competition drives excellence. And what has taken place in the energy sector since that announcement has been the opposite of democratization of the energy sector. There's been tight-fisted control by Eskom to remain in the monopoly and remain in power. And only now, through force, there's a very active process of quickly trying to see, okay, we need to unbundle Eskom, separate our transmission, we need to get other players onto the grid, other IPPs that are bidding to get onto the grid. When we think about that, we think about what will happen when we do switch over to a free market, and we think about the players that will be the first to come onto the grid, the first movers. They'll be taking a great risk because there's no way to really guarantee the price of electricity. So they'll be taking a great risk to put down the capital to provide the power. And as parties taking the great risk, they'll want great returns, and they'll want money back for the risk that they've taken. So when we do switch over, I don't see an immediate decline of the price of electricity. When we get to a democratized energy state, I see actually a further increase of the price of electricity when we get to a free market model. After about 5 years, then we'll start to see a decline in the price of electricity due to competition. So what does all this mean in terms of rejection? I know I said it, but it's difficult to see, and sometimes we need to see it visually. Compared to last year, I see an overall projection, well, our projections are that we're going to have a doubling of load shedding over the next 5 years. I put a UFO there at the end, getting some laughs, because we really don't know what that looks like in South Africa. At the moment, we have an average load shedding stage of between 3 and 4, and in 5 years' time, it's going to look between stage 6 and 8, sometimes going up to stage 10 and 12. We've seen discussions from Eskom of the schedules being updated to stage 16. Stage 16 is where Eskom comes to your house and blows out your candles. So it basically means that there's no power that's given to any power demand, any power users on the grid, and the energy that is on this, or the electricity that is on the grid, is just used to power the lines and to stop a total grid failure, and to keep the power stations themselves energized and online. So, a doubling of load shedding over the next 5 years. What's interesting to note is that next year, when elections come around, we would have had a 50% increase of load shedding between last year and this year, and then a further increase that year as well. So this load shedding is going to go through 2 election cycles, not just one. So it's not just next year that ANC's got trouble staying in power, it's then the next election cycle as well. So it's going to be very interesting to see what happens. This is a conservative projection. Things could get a lot worse. And I've only kept it to 5 years because depending on what decisions are made now, it will either then top out at that point and then start declining and then come to an end, hopefully after 10, 12 years, or it will continue to increase. And then the Gini coefficient that was mentioned previously will then double or triple, which is very unfortunate. So, parting thoughts. There is an actual example of a developing country that got it right with incentivizing a lot of solar rooftop panels coming onto the grid at one point. Vietnam, they incentivized 9 stages of load shedding, or 9,000 megawatts of load shedding, in a 6-month period. They did this by offering a 20-year feed-in tariff that was above the current price of electricity in the sector, in the market, and that made the investment decision for solar panels immediately positive and makes sense. This is possible to do here, so when we hear from the president and from Gwede that there's no quick solutions, I don't believe that. There is an example of a quick solution of 9 stages of load shedding during the day being removed from another developing country. And interestingly, in the last month, December alone, they installed 6,000 megawatts in that month. So the incentive was put in place, all the industry players got into place, brought in the stock, the installers got into place, getting trained up, being able to do the installations. They did the installations, and we could see this here as well in South Africa if we could confirm what the feed-in tariff is for the next 20 years. And that's my time. Thank you.
I've asked Matthew to stay for a few seconds because clearly we are all alarmed by what he just said. Part of my job is to read the room. I read a lot of questions here. And for you too, Matt, because, you know, your business is, your company's in the business of financing me. If I want to put up a solar panel in my home, there's an online platform where I can go on and tell you my needs. You send me your codes. You connect me with the financier, bada bim, bada boom. So I don't want this audience to say you are self-serving by scaring them here, that you are trying to get them to do more clicks. So any questions, I will allow 1 or 2, maybe even 3 if they're really burning. There's a lady right in the middle here, so if you don't mind giving her a microphone. Please keep your hand up, ma'am, so you can find you. Thanks, ma'am. I want to make sure you are not, you know, you don't have to carry this when you leave here.
No problem.
Yes, ma'am.
Thank you, Matthew. I'm Spong Electele from African Women in Agriculture. You've just given us a scary picture because as farmers, we're actually experiencing a lot of challenges, especially with the load shedding. We're losing crops like, I don't know, because we're using hydroponics. We're doing rooftop farming. And now you've mentioned the fact that Vietnamese have managed to deal with this challenge. And I want to challenge us as South Africans because in every crisis, there's always opportunity. And it's up to us seated here right now and where we're coming from to say, how do we build together to deal with this load shedding? And it will take people like yourselves and others among here who have solar knowledge and also will be able to assist, because the challenge with solar energy is their cost. And who is up to finance those costs? Because the challenge is that you are here, you've got a solution, but who is raising their hand to say, can we finance that cost?
Right.
And if you're looking at households, most households are also having a challenge to put those proposed rooftop solars.
Right.
And if we don't come and partner and collaborate, because the call today would be, can we collaborate and partner? Being finance, coming on board to say we are working with energy solar suppliers to get them to fund. Just as much as the government is talking about incentives, those incentives will only take place if there's people who are willing to fund and install, and 100%. We work together. So that we don't have this gruesome, that is the end of the world. It's the beginning.
Yes. That's very good commentary.
Do you want to respond?
Yes, and thank you so much for that commentary. It's very important that this is the time that we get together as South Africans and we face the challenging times ahead. And what we're seeing, thankfully, is the private sector stepping up to the challenge. And not just Old Mutual, but all the banks are starting to position themselves to fund both homeowners and also business owners in sustainable ways, where the funding is very close to prime and really coming to the party and joining in the struggle. And for me, it's an exciting time. Because this is the transition away from relying on the government and hoping that they will sort things out with energy towards it's now in our hands and we are no longer reliant on the government, but we've taken care of it ourselves. And now we are empowered as a country to never be in a position where we're vulnerable to one player, but we are actually very formidable. So thank you for that commentary.
Let me take one more. Yes, sir. Oh, is there a hand already? Have you picked somebody for me? Okay, please go ahead, sir.
Thank you so much. My name is Vincent Obisiorlu. I'm with Good Governance Africa. And my question is, you spoke about your lack of confidence in the new Minister of Electricity. how do you feel about the recent approaches by Treasury towards the energy crisis? Will they be sufficient? And how would you advise government and Treasury and the Energy Crisis Committee to approach things? Thank you.
Great question.
Great. Yeah,
Short answer, make the incentive 150,000, not 15,000.
yeah. That's one of the ways. I think the main way, so first of all, the incentives that were discussed and announced and gazetted were very good for business and make sense from a business perspective. For households, however, it's quite minimal. So we'd like to see a further announcement up to 150,000 Rand, if it's possible. And primarily, we'd like to see a feed-in tariff that is announced.
A what?
A feed-in tariff. So
What does that mean?
Confirmation of what the government or Eskom or the energy sector will pay me as a provider of electricity to the grid. So when I'm producing solar from my roof, how much money will I get back per kilowatt hour that I put onto the grid? And once you put that in place, that's the enabler. That's the roadblock or the hurdle that you then remove. And the entire sector then comes to the party. All the individual people, it makes sense for every house to get a solar installation and every business to get a solar installation at that point. And then you see the great escalation that we saw in Vietnam.
I'll take one more. Where is my microphone? Thank you, sir.
Good morning, ladies and gentlemen. My name is Moses Untwade from Kabelo Maintenance and Logistics. Mr. Matthew, what you have just said, I'm familiar with it. I saw the room. It seems like you're talking something else, but I'm familiar in terms of the Eskom, it's going down to the drain. In fact, like me and my associate, we had other big companies have a feasibility study to build a solar plant in our country because of we're very much aware of the Eskom problem. In fact, like the people who were in Eskom previously or back ages back, they asked the deputy former president that in 2014 we're going to experience 1, 2, 3, and yet it happened. And the former president came in the platform and said, "I apologize. It didn't do anything." So we are very much aware that what is going to happen. And maybe on your side or for now to go into the future, maybe I'm going to need you so that how can we assist, maybe to take government into the board so that they can see the different environment of view that this thing is not going to work, even if they can bring the minister of energy or home, but they must forget about what's happening in Eskom. You must bring a deviation. Thank you.
Thank you so much, Baba. Thank you.
Great.
Any final parting shots, Matt?
Very much looking forward to meeting with you and chatting with you about that. We are fortunately discussing with the presidency what it is that we think from the private sector would be good incentives and good moves from their side. It was a bit reactive, took them until now to then ask energy experts about their opinion. So I'm looking forward to the transition that is going to be taking place in the next 2 years.
Great stuff.
Thank you very much.
A round of applause for Matthew once more. Thanks, brother. Thank you. A man who brings sober news. News we have to hear, but we don't want to hear. In fact, it's a great segue onto our next panel that's obviously going to be run by the steady hands of Nastasia Arends. Their theme is around solving SA's energy crisis through renewable energy. And Nastasia, I have a request for your panel to deal with a specific challenge that I only learned of 2 weeks ago. Matt, I didn't have the time to pose it as a question while you were on stage, but I've come to learn that one of the difficulties for small businesses to install renewable energy solutions for their businesses are the landlords. So, and it's just, when I heard it's one of those things when you hear, you go, oh, wow, I should have thought of that. So it turns out that, the big tenants, the so-called REITs that you Tebogo, are an investor in, are not open to the tenants in each office of a building block, as you can imagine, to implement their own solution. Because you see, they have these things of recoverables when they supply you with electricity. And of course, they put all sorts of margins on the electricity recoverable. Ask any tenant, they'll tell you that the electricity they pay isn't the electricity they consume. But to cut a long story short, a lot of these small businesses, even if they are occupying a big part of an office block or a property, have to get the consent of the landlord to allow them to install, for example, a solar panel. And apparently the landlords are not open for these small businesses to do that. So I think it's creating a little bit of a challenge because most small businesses are tenants of where they work from. They don't own the property, at least not most, own the property that they work from, even if it's an industrial place. And apparently a lot of the landlords are not necessarily playing ball, which means it can undermine this entire drive. So we got to get these landlords to come to the party. And I suspect it might be a commercial issue for them. They might be having to give up certain margins that they would typically make if they owned all the infrastructure and just almost sold it on to us. Something to think about, something perhaps, the wise people of your panel can deal with. Nastasia. On that note, please, ladies and gentlemen, welcome on stage, Nastasia Aronson.
Thank you to Andile. And I think it opens the door, perhaps even an opportunity to get them the likes of Growth Point, Redefine, a Mirror Property Fund. So that is, I don't know, Andile, what do you think about that? We could get the property companies. Okay, awesome. So we had Tebogo opening, the scene for us, setting the stage, and that very sobering presentation from Matthew. And I think, as Andile mentioned, it is a nice segue into the conversation that we're about to have here. And I'm going to be introducing my panelists, and we're going to kick off the conversation. So without much further ado, I'm just going to welcome to the stage James Cumming, who is the GM of ACID, to just join us on stage. Then we have Jan Fourie, who is the Executive Vice President for Scatec in Sub-Saharan Africa. And he'll be joined by Frank Gray, who is the Chief Lending Officer at Hohm Energy. And then we have Carl Durham, who is the Head of Sustainable Finance and ESG Solutions at F&B Commercial. Awesome, gentlemen. Thank you so much for your time. So as I mentioned, we had Tebogo, we had Matthew setting the scene. But just to add a little bit in terms of what they've just described, I mean, I could be wrong here when it comes to the number of years, but we've had about 15 years of intermittent load shedding. Add that to the massive tariff increases that we've experienced, and not forgetting some of the emissions that are coming out from the old, dirty coal-powered power stations. And of course, that very sobering presentation, which creates all of this when it comes to reforming our energy sector, urgent but no less dramatic. And let me just take you through what happened last night. We had S&P Global Ratings downgrading our outlook from positive to stable. And what do they mention there is the key issue? It is the ability to be able to have sustainable energy. And we saw that as well, the impact of that in our fourth quarter GDP numbers that came out on Tuesday. And what was quite interesting about those fourth quarter GDP figures is that Eskom subjected the country to power cuts for all but 3 days of that fourth quarter. And I can't even begin to imagine what the first quarter numbers are going to look like, given the kind of trajectory we're going here and the kind of impact that we are seeing, especially when we have a lot of these JSE-listed companies that are telling us, given the financial results that we've seen so far. So, gentlemen, with that scene and everything that we've painted, I just want to kick off just from Matthew's presentation, your thoughts. I mean, let's start off with you, James. I mean, really a sobering picture. Never mind the UFO at the end of that graph, but certainly sobering.
Yeah, I agree. Indeed, it is. I'd not seen it depicted in that way, and it is disheartening. But I mean, you have to be an optimist to keep going, and we are. I think there's a huge amount happening within the renewable energy sector at the utility scale, which is where we're involved, with private sector off-takers looking to enter into PPAs, long-term PPAs that are bringing power onto the grid. We've seen these recent tax incentives Those don't necessarily flow through to us too well, but it's an immensely complicated problem that's requiring a huge amount of effort and focus. I think, unfortunately, there's only so much we can do immediately with renewables. As much as this is a green economy discussion, one of the first things we absolutely need to get right is the availability factor of the existing fleet. And in parallel to that, continue support for renewables through government procurement processes, but also in the commercial and industrial sector, where we can get more electrons onto the grid in parallel. And that's happening, but it does take time.
Right.
The biggest issue that we're seeing right now in terms of unlocking renewables' ability to solve the problem is grid. A huge swathe of the country, as Matthew mentioned, the Western Cape, Northern Cape, and Eastern Cape is seen to be locked up without any more capacity available for additional generation, and that's a massive issue for renewables to be able to solve the problem. Some of the best, most competitive projects are located in those provinces, and it's a bit baffling to us the way Eskom's modeling the grid in coming to that conclusion, and I think it's incredibly conservative. And just with the stroke of a pen and policy, Eskom could change their assumption on what capacity is available, and if we can get that right, there can be a more immediate solving of the problem through utility scale renewables for sure.
Yeah. Ian, your thoughts on that? Because I've heard that argument come through, especially from various other energy experts, the likes of Chris Yelland, et cetera, saying that, yes, we have the options and we've got the availabilities of wanting to use renewable energy, but we want to also fix the problem that is Eskom working on the grid, working on the coal fleet in order to build that baseload capacity. Is that the Kickstarter here, or how are you seeing things?
No, thank you. So, well, maybe taking a half a step back, I must say I really enjoyed the honesty of Matthew's presentation, because I think we've had call it a political veneer over the scale of the problem for way too long. It's whenever someone says the problem is going to be fixed in 6 to 12 months, no one takes them seriously anymore, irrespective of who's saying it. So either they're ill-informed or they're malicious. It can only be one of the two. And I think being able to mobilize more money from abroad and be credible, I think we all need to align that Rome is burning, and Matthew has clearly indicated it. And now, like, okay, we can't just have meetings to have more meetings. Now we need these concrete actions. But being in projects and development, I'm more of a glass half full type of person. So all I'm saying is massive business opportunity for South Africa and the ability to transition. And despite the challenges, I mean, I think government has shown through the reprogram, I think a lot of expertise on all fronts have been incubated, legal, financial, and I mean, that paves the way for, I think, more, say, triple P type jobs, whether it's in other social infrastructure as well, beyond energy. But specifically on I think on the Eskom side, we need all hands on deck. We need Eskom to be fixed. We need the grid to be expanded, and having concrete plans towards that, we can start spending the money and building the grid. Because at the current rate, we'll only have the grid built in 10 years, or starting to build it in 10 years. So, like, actions now need to flow forth from all the lovely plans that we've made. We're really good at making plans and presentations. But when it comes to implementation, there we are struggling a bit. And I think part of the problem has been the trust between business and government. Whenever business says something, government takes it with a pinch of salt, and I guess vice versa as well. So, and coming together to trust each other to solve the problems jointly. But I mean, the grid is a big issue, but part of the grid is now forcing projects into provinces that didn't previously basically get access to renewable energy projects. And we need to do those as well, to distribute the projects in different provinces, get more job opportunities in those. But on the same account, you are going to find higher tariffs because there's less wind and there's less solar in those provinces. As simple as that. So where we've got our big resources, solar and wind, let's build the big pipes from there, effectively, to the metropolitan areas and the industrial areas to get the power there. We've got the expertise, We've spoken about capital being mobilized. There's enough capital. I work for a Norwegian company, and I mean, we've just concluded a $1 billion deal for one of the biggest solar and battery projects in the continent. And there's lots more of that's coming, and people are willing to finance. So yes, it's a big problem, but we all need to pull together and get it done. We've got the people and we've got the money. Just press play.
Press play. I wish it was that simple as well. But we're going to talk about the capital aspects, and I know we've got two gentlemen here on our panel, Frank and Kyle, who will be able to shed some light on that. But Kyle, I want to talk to you because it was quite interesting to see the definition that Tebogo has as Old Mutual when it comes to how they are defining what a just transition is. And for those of you who may have missed that little bit, it's a nice definition, but I want to get a sense as to, from an F&B perspective, are you seeing the just transition in that particular way? And the way Tebogo has described it was retaining, retraining, redeployment, and or compensation of workers affected by decarbonization. Is that in line with the way F&B is seeing it, especially in your position as the head of sustainability?
Yeah, so I think, thank you for the question. I think the just transition is a fundamental element of decarbonization. And for us, taking our customers with us on the journey to decarbonization is intrinsic in everything that we need to do. So, if we're talking energy, or if we're talking sustainable agriculture, or sustainable any other sustainability sector that needs to transition to sustainability, it's got to be done in a fashion that was very, very well described by Tebogo. So I think we're completely aligned with that kind of thinking, and it's at the core of our sustainability strategy within F&B Commercial.
Frank, with so many competing interests in terms of how we solve the energy issues in South Africa, how do you prioritize what's actually really needed? Because between Matthew's presentation and his estimates that perhaps load shedding could double in 5 years, it gets worse, and we don't even know what stage whatever looks like beyond that. What do you prioritize right now, given what we're in, the quagmire that we're in?
Sure. It's an interesting question, because I think there's so many priorities, and I do think what's been really encouraging from the private sector in particular is this emergence of this. There's been expertise in the market for a long time, and I agree that we've got the capacity and the willpower to do it. What I think is really important is to understand how the value chain fits together and how the supply chains fit together, and understanding then those linkages and those pieces that kind of pull it all together and start to prioritize those integration points. I mean, we obviously focused from a residential perspective primarily, and there's been a lot of talk about kind of supply shortages, like not the capacity to get panels on roofs and all those sorts of things. And when you actually break down the problems into that kind of value chain, you realize that you've actually got a number of different types of sectors trying to work together, and the integration points aren't always there. And I think although the capital is available, it's not necessarily deployed timelessly into the right areas. And so I think one of the things that I would prioritize firstly is just to actually get transparency through that value chain, understanding where these problems are, start to surface them, and then really start to see those, like I said, those integration points that we can move the capital through that value chain in a meaningful way.
James, your thoughts, that value chain, the ecosystem, what are you seeing in terms of the challenges?
It's really the fact that outside of REAP in the commercial and industrial spaces, speaking to stuff we're familiar with, it's the ability for private off-takers to get their heads around what's needed in power purchase agreements, for there to be equitable risk allocation between ourselves as generators and IPPs and them as buyers of that power. That's an important value change in terms of generation to offtake. That is just as much as there's a huge amount happening. It's taking a long time for everyone to develop a precedent of documentation and kind of market norms, and I think that's a bit of a drag on the value chain that needs to be picked up. It'll get there, but I mean, as per Matthew's presentation, time is not on our side. Whether or not there's more we can do to standardize those processes right now, I don't know. The numbers involved are large, but I'd agree. We've done this all before, mostly in the government space. I mean, in the renewables industry, we've almost got a capital problem. We want to be spending more money on more projects at a faster rate. The capital's there, but it's just the kind of maturity of the industry outside of the government procurement process, because we've seen the government procurement process fail. It has, and that's largely down to grid capacity issues, and now more and more it's up to the private sector to solve it.
Yeah. Jan, in those ways in which the private sector can solve that, what are you seeing, and I suppose call it the low-hanging fruit? I hate using that as a description, but I'm going to use it at this particular point because we've stressed the urgency of the kind of situation we find ourselves in. Where's the low-hanging fruit from your side as Scatec?
Well, I actually just want to add one comment to what was said previously. I think it's the very positive development about removing the caps on sizes of projects now is the cyclical nature of REAP is now taken away, where I think previously contractors, electricians, suppliers it was a bit of a flash in the pan. Then there's a tender round, then it's extended, so it was very difficult to plan around that. Where now with the private sector coming in a big way, call it large companies and construction companies and suppliers can now actually start planning around it because it's not that cyclical. You've got government programs, then you've got rooftops, and then you've got, say, large private power coming in between. And I think that's very good from developing the ecosystem and supply chain around the industry. Because, I mean, it's very difficult designing that around a particular element. And we've seen many manufacturing companies coming and failing and going away because they were beholden to a program. And then it comes and it goes. I think the first thing for business, and we're not in rooftops, is if you've got a rooftop, put solar on it. So, like, get the behind-the-meter stuff in place as soon as you can. And as I said, I'm not saying that because I can gain anything from it. But as a country, I think that's really important to use the available space you've got behind the meter to solve that. And then I think standardization in the industry, like what does these risk allocations look like? Because there's many businesses that's not necessarily a energy-intensive user, like financial institutions and other businesses who desperately want to buy electricity. But there's a learning curve element that people need to overcome, and the same was true in the government program. It was delayed, and then all of a sudden it exploded. So I think important bit is just like general education of people in the business sector, because there's more than enough projects at least that's able to get to grid. It's now just how do we take projects from, I don't know, 36 months down to 18 months or something like that to get them on grid. But the main thing is to get the private balance sheets engaged in the process so that everything doesn't sit on government.
Before I get into the private balance sheet, I want to stay with the two of you, Jan and James, on this one. When it comes to the renewable energy program, and I think these are the latest IPP office figures, it's saying here injected nearly 260 billion into the economy. However, despite the fact that it's been a success story, some of the issues that had come through, at least over the past year, and some of the call it media platforms that I've at least participated in, say the success has led to a new challenge that prices have been pushed down to such low levels that the bidding format threatens the viability of smaller players. Do you agree with some of the views that have to do with that reprogram, or how are you seeing it?
Firstly, just to maybe correct or qualify what I was saying earlier about REAP having failed, that's only in the last bidding round. It's an excellent worldwide sort of success in terms of it having been built on other countries' experiences, and it's been fantastic. It's really this interplay between the DMRE and Eskom and the grid situation that's had it fallen over. Just to be clear there, yeah, I think where tariffs are going in the REAP process does sort of marginalize smaller players, but at the same time, those tariffs are competitive for the public good nature of what government are trying to achieve, and I think there's plenty of other opportunity in the corporate or commercial and industrial space for smaller players to still get involved. So it's a truism, but I think it's maybe a necessary evil. There's also a huge amount of businesses involved in the value chain that still benefit. The scale is important, and those low tariffs are a good thing as long as you can ensure that you're bidding on tariffs, making promises you can honor, and that's been quite challenging in recent bid rounds. Mostly because of exogenous factors. We live in a country with a highly volatile currency, and the world's just not been the world it was 5 years ago over the last 36 months or so.
Right. And I just want to encourage those who are watching us that you can continue to send your points. I do see some questions are coming through as this conversation is unfolding. I want to come to you, Kyle. The field of sustainable finance over the years, especially its evolution when it comes to the energy transition, where are we right now?
Yeah, so I think sustainable finance, particularly for businesses in a kind of a commercial banking environment, is really very, very new. You know, we've seen sustainable finance in the kind of listed environment really accelerate in South Africa. Our colleagues in R&B, for example, really doing some incredible work from that perspective. In the commercial world, really, the roots have been in energy finance. We've seen that really be the kind of foothold for sustainable finance. It's rapidly increasing as our customers are facing kind of international pressure. We're seeing kind of decarbonization pressure out of Europe, out of the likes of the US, causing kind of significant pressure on a large part of our customer base. And it's really a part of kind of, and it's the same in energy, but in sustainable finance and in sustainability as a whole, it's how we support our customers in meeting their kind of external market demands and helping them really get to grips with what the world is becoming. So energy really forms part of that. And in our world, energy has, in the view of this kind of crisis, is one element of it, but using renewable energy is kind of the key way for many of our customers to meet these global demands. So that is really the link between kind of call it energy funding and sustainable finance for us in FNB Commercial.
On that note, I'm going to stay with you here. There's been a lot of optimism, a lot of pledging of capital, and then a desire to be able to get the capital to where it needs to be. Are you seeing that where the capital is going to where it's needed in projects that it's needed to, I suppose, go to? Are you seeing obstacles, and are there any solutions to any of that?
So I think there's been some really strong incentives. I mean, there's the advent of Section 12B. In the past, for under 1 megawatt projects was a huge catalyst. We saw that 100% write-off. A lot of our customers were early movers and are now, kind of moving into second phase, third phase projects. The bounce back loan scheme for us is a key way of extending the continuum to assist our customers. Traditionally, some of these assets are quite difficult to finance and kind of caused that the pricing wasn't advantageous. So the National Treasury bounce back loan scheme, which we've been using really since the original form during COVID-19, which we're using now for energy, is a really great way that we're getting kind of to our customers and expanding what we can do for our customers. Look, there are some obstacles. The obstacles around kind of process within kind of Eskom and within some of the municipalities allowing for kind of the approval processes to go ahead add unnecessary delays. We've got some projects that are held up over a year because they're just waiting for a municipal sign-off or an Eskom sign-off. So there's some work that needs to be done from a government perspective in that arena, but we've at the same time also seen a lot of those kind of barriers starting to be removed. So the removal of the 1 megawatt cap, for example, has led our customers to implement 3, 4, 5 megawatt rooftops quite comfortably. So really it is a balance. It's not perfect, but I think we're starting to see an enabling environment around rooftop solar that is really encouraging. And we're keen to play our part and as a financier into that space.
Frank, I see you nodding your head. So perhaps, building on what Carl just said, but you could give us some insights on the finance options that are available for small scale embedded generation, especially when it comes to the space you're playing in.
Yeah, so I mean, the reason I'm nodding is I think a lot of those challenges that sort of the commercial side is true in the residential side, which is obviously where we're focusing on. So, I think a lot has been done around trying to finance the end user, and I think it's a really important part of the chain. So, the introduction of kind of the mortgage players coming in and offering solutions to people that have got bonds or home loans, I think is really, really positive. We've seen a couple of players coming in and around the asset finance side as well. I think the big challenge with that piece is understanding the risk and understanding what that risk actually looks like in this particular space. So there's a lot of data around how consumers in particular behave around their houses and putting assets into their houses, and that's well understood. But how that kind of links up to the technology and what's being used from a rooftop seems to be a bit of a gray area. And so I think we're seeing kind of a slower shift in terms of how credit policies and credit decisions are being made. From our perspective, we think technology is a great way of solving some of those problems. We're seeing, particularly on the inverter side, smart inverters starting to come into the market overseas, and hopefully that they'll start to enter our market where you can actually bring full transparency to the asset. You can control some of the consumer behavior by helping them save on their costs, and that then produces interesting financing solutions. But I also just want to say, I think over and above that, and this is what my comment was around the value chain, is with so much focus on the end user, on residential, we've got quite a distributed kind of supply chain. And so lots of bucky installers running around, and these guys are all small businesses that have got opportunities to actually grow their businesses. I mean, as we see it in the residential space at the moment, on current demand, we've only got about 16% installer capacity to actually meet that demand. That's without even any growth from the incentive programs that are now coming in. So, what that actually means is today we could probably find about 3,000 to 5,000 jobs for installers just to meet the current demand. And that's a huge opportunity, but we haven't quite seen the funding solutions come into that environment and matching up with where the revenue is coming from and how that actually kind of fits together. And I think that's a problem that needs to be solved. And I think the kind of the lending community has a role to play there. Likewise, on the supply of equipment. So on the distributor side, we speak to all the main distributors. This working capital cycle that they've got has been very chunky and kind of unpredictable. And so maybe some of the traditional models don't necessarily work for them at the moment. And so how do we actually enable more capital into their businesses so that they can put bigger orders? Because one of the big reasons why we're having supply issues is not only kind of the demand cycles that we've got here, but also just being able to be prioritized with the importers from the likes of China. I mean, we spoke to a supplier in Shenzhen, and then they're supplying $1 billion a month into Europe and the US. So for us to come in as a country and put even just $50 or $60 million orders in, which is kind of where we are at the moment on the residential side, they're not really going to prioritize us. So we need to up those volumes. And I think again, the capital markets have a really good opportunity to participate there.
Okay, so I'm going to shift gears a little bit when it comes to the conversation, James, and come to you. What are you seeing when it comes to the growth in the commercial and industrial wheeling market, and I suppose even the way that can service some of the private power off-takers?
The demand is massive. There are requests for proposal processes being held by major power users across the board. Many of them have run their processes and appointed projects. We're doing some of those. So we've done a project with a 30 megawatt PV project with Harmony Gold that should come into operation in the next 2 or 3 months. We're very happy to announce that last week we closed the first private wind farm with Sasol. It's a 69 megawatt wind farm in partnership with Old Mutual via AIM and Utile, and RMB were the lender there. And many others in our space are doing the same thing. Not a huge amount has come to reach financial close and commence construction yet, There's been 200 megawatts for Tronox. Heineken have done some work, Amazon as well. But I think over the next 12 to 36 months, we'll see a number of gigawatts being put onto the grid, servicing these private off-takers. And then that moves from there. There are only so many very large off-takers that can be serviced through sort of the typical bilateral long-term PPAs. And I think the next nut to crack, which a number of businesses are looking at and is vital to happen, is the aggregation and trading model, where there can be IPPs or generators like ourselves selling to traders that then can on-sell to stacked megawatts from multiple off-takers, from 1 megawatt up to 50, 150, where we're just dealing with a single off-taker and they're selling to multiple, a single trader and they're selling to multiple off-takers. So it's a very, very exciting time. There's a huge amount on the go. There are many businesses and many teams working around the clock trying to get projects onto the grid. I think back to that value chain and capacity issue, that's something I probably should have mentioned earlier. That's one thing we are seeing, is that there's only so much we can achieve with the level of kind of capacity incumbent in the country. You could probably add 50% to that. And I'm talking about local teams and businesses and expertise. You could grow that by 50% and they'd be still running at full tilt. Yeah. That goes for contractors as well. Less the foreign suppliers. They'll always come into an active market, but local contractors certainly warrant some attention. So it's a super exciting space. I think the biggest thing we need to do is just create more precedents so that we can reach close quicker and get these projects online more quickly. Currently, it's taking about, Sasol we did in 14 months. Others have taken longer. 14 months is still quite a good timeline, but for the sake of addressing load shedding, that needs to come down to 6 if it's possible.
Right. For the sake of addressing load shedding, and I'm just thinking of the IRP, and I'm thinking of how it envisages South Africa's energy mix. And I know it would be remiss of me to, want to end the panel and not talk about the idea of nuclear and gas. Where are you seeing that in the picture, if at all, given the time constraints that we have in order to solve the energy crisis? Frank, Jan, I just want to get your thoughts in terms of that when it comes to nuclear, gas. Do we need it?
I guess that's quite a contentious question in many respects. I think the biggest problem, nuclear technology has been proven around the world. It works. We've got one that works as well. The only problem is it's always over budget and takes 10 years longer than expected to be built. And you can look around the world. So EDF is the biggest operator of nuclear power stations in the world, and Flaminville, the last plant that they built, are many years over time. The same in Olkiluoto in Finland. The only place that seemed to be able to build nuclear power stations roughly on time is China. So I think if Medupi and Kusile has anything to go on, and the fact that you then mortgage the future of the next couple of generations to that, I would say probably not the best idea for South Africa. And also you need to wait a really long time before you actually bring power online. It's not modular by nature, and the modular version we tried to develop was a failure. To put it bluntly. And then on the gas side, at the moment we don't have gas infrastructure of any significant nature in South Africa. And then we also don't really have the resources yet. Yes, so there's been deposits found offshore, but from finding them and bringing them into production is going to take us a really long time. And then you also need to deal with the currency volatility of that commodity, because it's sold in the world in US dollars. So if you're buying it in rands, then we're also sitting with both the commodity fluctuation as well as the currency risk that's linked to it. So again, from a timing perspective, I think there's a lot of people saying that it's a nice flexible fuel to be used in the interim, kind of whilst renewables are busy ramping up. And I think there's maybe some merit to it. But the problem is just, I think by the time you create a full infrastructure around it, it's likely to be defunct unless you can pivot it to green hydrogen in some shape or form at the same time. Yeah, if we had a developed LNG market, maybe a different story, but from where we find ourselves now, to be able to achieve the climate goals, I think it is probably a fool's errand.
Okay, so let's talk about that, and let's bring in James in the conversation when it comes to green hydrogen, because that has been punted as the fuel of the future. And I've read articles that say South Africa is uniquely positioned to produce a substantial amount of it. Do you see it? Can South Africa pull it off, given what you've seen, maybe the reports you've read or the conversations you're having in your circle, the opportunities within green hydrogen, James?
Yeah, I think they're there. It's similar to gas. It's going to take a long time for it to be. Well, I mean, let me start by saying that the Sasol project I was referring to, that's going to Sasolburg, which is going to be used for green hydrogen productions. They're already producing hydrogen, and now through a wheeling arrangement are able to label it green through that offtake. So it's already happening, but for it to happen at the scale that many are talking about. The amount of renewables you need to effectively provide the generation for what's really a baseload requirement is massive, and then you need to be close to water. I want it to happen. I think it'll happen, but it's probably a sort of 5 to 8 year, maybe 10-year gig in it coming to fruition and the way people are talking about it now. It's an opportunity, but I think that our real focus needs to be electrons onto the grid now. I tend to disagree a little bit with Jan's view on gas. I mean, the renewables can only do so much because of their intermittency, and that needs to be managed by some controllable conventional power source, I think, until battery storage gets to where it needs to be. Whether or not that's us going and getting our hands on the Eskom fleet and sorting that out with existing power stations, or developing new gas, or using peakers more regularly, more efficiently, I don't know. But I do think it needs to play a role.
We've got about 25 minutes left of this, and I'm going to probably steal another few minutes before I start taking some of the questions, just to make sure that everybody in the room has sufficient time to also get their questions answered. Kyle, I want to talk to you about this, and I'll probably pose another question at Frank as well. When it comes to, call it, the challenges across the financing landscape when it comes to this conversation we're trying to have around the energy transition, what are you seeing? Are you seeing challenges perhaps when it comes to the size of investments? What challenges are you seeing on that side?
Yeah, so I think the challenge is not so much on the ability to finance effectively. I think a lot of work has been done, and a lot of work still needs to be done. So access to funding is a working problem that is a continual discussion, I think, across banking, as it were. But I think this industry and this requirement has a very specialized nature, and we can talk about kind of how businesses look at it. So at this stage, a business's core strategy isn't around energy predominantly. They let's use a farmer as an example. They understand their tractors, they understand their fleet of vehicles, they understand their pack houses. But to ask a farmer as an entrepreneur to start thinking about how energy needs to be integrated, I think is really difficult. And this is across all businesses. I mean, from SMEs to larger businesses. So the challenge that a lot of customers are facing is actually getting to grips with what this investment case means, and to actually deal practically with the 6 or 7 quotations that are now landing on their desk, and how they can actually make sense of what the solution is that they're actually going for. So for us, it's actually practically that by entering into this finance market, you cannot actually leave, let's call it informal advisory, kind of at the door. The two go hand in hand. So we really practically need to actually help our customers make sense of it. So if it's making sense of the the equipment that's being used, or if it's making sense of the supplier at a base level. Those are some of the ways, I mean, that we're trying to approach this. But ultimately, it needs a more formalized solution, and oversight from a central industry body is desperately needed to make sense of kind of the scale of how this this industry is expanding.
On that note, then, how are you defining what would be a bankable project? Because I've been to other conferences of a similar nature where we're talking about stuff like this, and the issue has been the lack of bankable projects. Is that the case?
So I don't think it's the lack of bankable projects. I think it's the challenge that we have in the amount of bankable projects that are coming across our desk and how to assess them for bankability. So, in the volume really market of small to medium enterprises, you cannot go into a full due diligence of the project and of what the equipment is and the supplier. So you need to have I'm going to call it a bit of a cookie cutter kind of methodology of looking at that. So we utilize approved suppliers, which is something that comes out of the asset finance world. Where motor dealerships are accredited, we're using a similar methodology with some solar specific or energy specific kind of nuances. For larger projects, we then do have the time to work with our customer, work with their chosen supplier, and go and do a kind of, I wouldn't say a project finance unpacking of what they're looking at doing, but making sure that the supplier that they're using and the solution that they're choosing makes financial sense. And we can kind of do a high-level due diligence. So it really is an intermediate step between full-level project finance and asset finance, and that's the kind of role that we're looking at playing.
Right. So with just 20 minutes, Frank, I want to come to you. I mean, we started off talking about the idea of what a transition is, or transitions, if you want to think of the different pathways to be able to get us there. And in these kind of conversations that we're having here in this room, it's always so important that we don't want to leave communities behind. We want to bring in a bit of a social justice aspect to the way we're thinking about our energy transition. How do we do that? And I suppose so that it works in the way that we want the just transition to be framed in South Africa?
It's a critical question. Again, I think there's two sides to it, and I think Walker alluded to the employment aspect of it, and I think I'll start there because it's probably in the residential space where we are now with the cost of equipment, and it is expensive equipment at a homeowner level. That's probably the most poignant piece, is how do we bring more people into the sector from a jobs perspective? How do we train them up? And we're seeing a lot of skills that are in declining sectors, particularly on the electrician side, that could be transformed into the installer networks that needs to be deployed. So for me, that's the most immediate piece. I think what you're probably alluding to is the concept of electrification and actually access to electricity. And it's such an important question, and I think it's a hybrid solution. And what I mean by that is solar rooftop can absolutely play a role, but the biggest problem with solar rooftop is that it's only available in sunlight hours. So what happens when people are actually at work? That's when the sun's shining. When they get home and they need electricity at their home, they want to do their cooking, they want to have their lights on, that's when it's not available. And batteries are such an expensive component of our systems in South Africa. And so I think being able to have the stable grid, to be able to have utility scale renewables on the network to ensure that there's actually base load available is actually a big part of that. And so we're not just reliant on kind of these self-serving systems on a one-for-one basis, but we're actually building scalable systems. Now, I think then what we can do is we can look at more aggregated solutions, right? So this is when we start to kind of overlap the needs of the residential space with potentially the commercial solutions and even kind of the larger C&I projects, because those communities, like I said, to do one-to-one units becomes incredibly prohibitive from a cost perspective. So how do we aggregate communities, and how do we build solutions that can then do microgrids or more distributed grids? And so you're not just buying one battery for one person, you've got battery storage for a range of people. However, what is exciting is everyone who's got a roof can contribute, and I think that's also about bringing people in. So even if the batteries might not be owned by a particular person in their house, that's shared by a community, they can still contribute to it by sharing their roof effectively. So I think there's lots that can be done there.
Okay, so I'm going to pause my side when it comes to the questions, rather, and I'm going to open the floor to questions. We do have a roving mic, and I already see 2 hands, so let's start there with the lady.
Hi. I just want to pick up on the point that you were talking about the batteries. And, oh, I should introduce myself. Ann Cabot-Alitzhauser, and I'm from GIBS, the Responsible Finance Initiative. And we keep talking about the cost of batteries, and yet the whole liquid metal battery technology that's developing actually uses resources that are readily available here in South Africa. So why are we not, and they're much, much cheaper than the kind of lithium-based batteries that we're now up against. But you seem to gloss over batteries, and that seems to be the most fundamental part that we need to address, especially if we're going to get into rural areas and we haven't, battery storage. So why are we not focusing on that sort of development here in South Africa? Yeah. Technology exists, the resources are here, the jobs could be created. So help me here.
Gentlemen, who wants to take that? James, you were smiling. Do you know?
I have no idea.
Who wants to take that one?
Well, I mean, I think so, and maybe it's just the flow of the conversation hasn't brought up. I don't think it's diminished, certainly in our world, in any kind of way. I think it really is an opportunity. But the challenge with it is that battery manufacturing, by its very nature, requires stable energy. And so it's this kind of chicken and egg piece. And we see it, I mean, we get the question around the PV manufacturing as well, right? There's no reason from the skills and some of the resources we've got in this country that local manufacturing wouldn't be possible, except the large amount of energy required to do PV manufacturing and battery manufacturing. And it needs to be consistent, and it needs to be stable, and it needs to be predictable. And I think, and that's why I keep saying is that it's a hybrid solution. You can't, like renewables and transition has got to exist with baseload. You can't do one without the other. And so to take on these challenges, that's where the utility stuff really is important in terms of the mix.
We had the gentleman over there.
Good morning. My name is Nate Macmillan. I'm the Decarbonisation and Green Innovation Director for Ascom Group. We're from Germany. I'd like to compliment what the last gentleman said before I ask my question. I feel personally that people in the townships, if there is inclusivity, like what Matthew Cruz was talking about, that the solar rooftop solution in Vietnam could actually be implemented in places like Soweto. And Soweto is very important because it's got a electricity debt. So in terms of the asset managers, you should start looking at places like Soweto as possible investment cases in terms of solar rooftop deployment. The other issue is on load shedding. If Eskom was to cut off Moselle, they would get 950 megawatts. If they were to cut off Namibia, they'll get 100 megawatts available. Now, the contract for Moselle ends in 2026. Namibia ends in 2025. And in terms of the energy emergency, that's a force majeure. So straight away, you'll go a few levels down on the load shedding. The other issue is, I know when we start talking about load shedding, there's a debate, ANC did this, and then before independence, the distribution was this way. Everyone ends up pointing fingers. The country needs to unify and start looking at how do we optimize electricity in South Africa. It's the municipalities. The municipalities need to map out their demand locally. The municipalities have got an excess surplus of feedstock for biogas. There's issues in terms of sewage and issues in terms of landfill. There's no need to import gas into South Africa. The feedstock is there. It's there with the municipalities. Municipalities can actually start setting up biodigesters and solve the electricity problem in the next 2 years. Thank you.
All right. So I'm going to get to the online questions. There are questions that are specific for some of the panelists. Jan, this one reads, aren't dispatchable renewables the answer to the the intermittency and gas argument? I'll let you think about the answer for that one while I pass on the next question to someone else. And that question I'm going to give to you, Kyle. It says, according to S&P, economic growth in South Africa is facing increasing pressure from infrastructure constraints, especially severe electricity shortages. How will this affect South Africa's economy in 2023? I wonder how you're seeing it within F&B as you're discussing it, economic projections given the situation that we're in. And the next one is actually a finance-related question. So I'll let Jan answer this particular question, and you'll come next. And then, if there is enough time, we'll deal with the next finance-related question.
Yeah, great. So I think dispatchable renewables is kind of very topical around the world. So how do you effectively combine different renewable technologies to come up with, to be able to deliver power when the grid needs the power? Now in South Africa, we are blessed with abundant sun and wind. And what you typically find is that the solar and the wind is uncorrelated, meaning that you find wind when the wind blows when the sun is not shining and vice versa. And that overlays quite nicely, and then adding batteries to it, you get to a very high level, depending on how much money you want to spend and to which level of base load you want to get to. You can get to a very high level of renewable dispatchable power. And this project that I've mentioned before, the one we're building in Keynote, is doing exactly that. That only includes battery and solar, and from 9 o'clock or 5 o'clock in the morning till 9:30 at night, the system operator will tell us, please give power, and then we'll give power in that. So it's been proven. It was a technology agnostic tender as well. So there was gas, you could put any technology to the test, and we proved that on a commercial basis that is doable. So I think it's not theoretical. I think we've proved it. And if anything, that's just going to be expanded, and globally it's busy being rolled out. So that is the trend, and you are going to see more of it. And then you also get the geographical element into it. If we build enough renewables, both wind and solar, in different parts of the country, yes, there's intermittency, but somewhere the sun is shining or the wind is blowing, and you've got the batteries to support that. So, yeah, agree with the answer that the question came with.
Kyle, we've turned you into an economist. So, economic growth, given what is happening right now.
Yeah, so I think by nature, economics isn't my strong point. So I think I'll fall back into maybe relating a little bit of a customer lens to the conversation. I think this energy crisis has done kind of two things. It's pushed customers into distress. I think that came very, very strongly through in Matthew's presentation. But it's also caused our customers to react as only South Africans can, and that is kind of using the acronym MAP, make a plan. And we're seeing our customers do some really interesting things. You know, those who can't adjust, I mean, are really in distress, as I put it. The customers that can adjust are starting to work, you know, kind of around load shedding schedules. We've had customers tell us, you know, making transport arrangements and moving their operations closer to kind of where their workers kind of live, so that they can work around these load shedding schedules. So they're making kind of plans around load shedding schedules. We've also then seen kind of customers obviously moving their operations into to bring kind of backup power and the like. So we've really seen that continuum. But for the vast majority of our customers, this is incredibly distressing, and it's really going to lead to significant economic kind of pressure overall. So I think that outlook is probably kind of positive, to put it lightly. I think it's really the growth outlook for many SMEs in South Africa is rather negative.
Okay. So as we get to a close and we start to wrap up, if I could just get closing comments from each of you, 30 seconds each, about what we can take away from this conversation. What should we be thinking about in trying to collectively deal with the issue we're facing? James, closing thoughts.
I like that statement earlier about needing to unify. I think that's really important between private sector and government. There's been a fair amount of negativity around government of late, but it is important to highlight that in many ways, they do need to be commended for the support that they're providing to the energy industry and getting power online. I think we all just need to interact with government better, ensure that we're applying pressure on timelines, because it really, to Jan's point, is we've got everything we need. The parts are there. I think play has been pushed. We probably just need to maybe push fast forward. Yeah.
Jan, your thoughts?
Yeah, a couple of things. I think that the level of honesty and realism is necessary, and we need to, in that way, call it take off the gloves, masks, call it what you want to say, in order for business and government to get together. And some people do need to take responsibility for what they've done or not done, because there are things that could have been done earlier. Then it would have been easier to push fast forward. For example, removing the cap on private generation. Why only now? But I mean, it's water under the bridge. But I think these are, we need to look back to say, well, how do we improve the future? But this is, if you're a business person in South Africa and you can at least see it half full, it does represent a massive opportunity if you are in kind of construction, assembly, investment, if you're a large-scale landowner. So, I mean, for me, it is an absolutely massive opportunity, and we'll be here as a company for a long time and still hopefully invest a lot of money and employ a lot of people.
Frank, 30 seconds.
Yeah, so we're a software company at heart, and I think so we see technology as playing a huge role in being able to bring these different parts together. So I think from our perspective, getting more capital into the value chain, as I said before, is really, really important. And ensuring that we can kind of bring visibility and trust to the system, I think, is also really, really important in that. And so I think technology's got a role to play in both those areas.
Kyle?
Yeah, so I think, again, going back to what our customers are experiencing and what's coming at our customers. So I'm going to go into the wider sustainability movement to just as a bit of an anchor. Yeah. I think the time is for our customers. I spoke about kind of the core strategy being, your operations, but sustainability is fast becoming a core strategy item. And it really starts with energy. So really an encouragement to our customers to start, if they haven't looked already, start bringing energy rapidly into their strategy. And secondly, realizing that the technology is available in the majority of business cases that they can do something. There's potentially other hurdles that we've spoken about, but that is really the kind of second message. And then I think thirdly, just saying that as a commercial bank and around all commercial banks, we need to do more to support our customers in procuring these solutions and play more into this value chain that was also brought up in the discussion. So there's a role for us to play as commercial banks in kind of being part of the unity in solving the solution.
On that note, let's leave it there. Kyle, Frank, Jan, and James, thank you so much for your time. And ladies and gentlemen, it's really been interesting. I know the gentlemen will be around. If you do have any questions that you want to ask them, please feel free if we didn't get to your questions on time. So thank you. Andile, over to you.
Thank you very much, Nastasia. Thank you very much to the panelists as well. Yeah, boo.
Photo moment, just for a minute with the
gentlemen. Okay, absolutely. We are going to be having a 10-minute comfort break. So please feel free to grab some eats and some coffees as well. I just want to confirm that the coffees and eats are available outside. Yes? Yes. Okay, so the doors are going to be open in a moment, and you'll be ushered over to where we can have a couple of refreshments. Thank you very much once again, you guys. The break is 10 minutes, so it is 11:34. If you don't mind, please being seated at least 11:45. Thank you very much. started. Please take your seats. All right, welcome back to the final stretch of our morning together. And we are now going to be going into our final panel discussion, which will be discussing the theme, driving investments into the green economy with a focus on utilizing green local production, purchasing, and resource efficiency. And on our panel, we've got some of South Africa's leading corporates and also a very interesting organization that I certainly got to know as part of this preparation, the Glass Recycling Company. You're going to hear about the work that they are doing in making sure that they contribute to the green economy. But let me first introduce every single panelist that is here. On my immediate left is Robert Lewinson. He is the head of responsible investment at Old Mutual Investment Group. So you can imagine he's going to be focusing more on the investment side. And as you heard from Tebogo earlier, they focus on investing on listed equities mostly. So he'll talk a little bit about that. I think listed debt as well. And then next to him is Diana Sibanda. She is the group head of sustainability at Coca-Cola Beverages Africa. So they are a manufacturer, as you know, a bottler, distributing the products to all corners of our continent. And she's going to be talking about how they are doing that more sustainably. I guess water is a big thing for you, as is many other resources in your business. And then next to her is Shabir Jatam. He is the chief executive of the Glass Recycling Company. That's the newbie that I certainly got to learn about in this panel. And he's going to be telling us more about, especially around legislation that South Africa has implemented in order to make sure that we do the best we can insofar as recycling is concerned, but also about some of the challenges that are, to what extent are companies doing the right thing in that regard. Shabir, thank you so much for joining us, sir. And then lastly, on our far right is a man who promised me beer and didn't deliver, is Richard Creel. He's a strategic projects and sustainability manager at Heineken South Africa. Thank you so much, you guys, for joining us.
Thank you.
For this panel. I'm going to kick off with you guys just giving all of us in the room a sense of, one, your organization's role in strengthening South Africa's green economy. And I guess we can talk Africa as well from a continental perspective. And also your specific roles and how you go about actually doing that. Let me start with you, Rob.
Thank you, Andile, and good afternoon, everyone. Welcome back. Really excited to be here and to share our thoughts about how responsible investment at Old Mutual Investment Group is a driver towards green economic growth via our impactful way of investing. So, I mean, Old Mutual is part of the African soil. We've been around for more than 175 years. For many of those years, being focused on ensuring that people really have a respectable and a decent retirement. On our side of the business, of course, we take those proceeds of our pensioners, of our life assurance policy holders and pension funds, and we drive those in a way, invest those in a way that drives an impactful outcome beyond investment performance and investment return, coupled with impactful outcomes into and driving and allocating capital in a way that has a socially inclusive, resource efficient, and low carbon outcome, which is our definition of what we define as being the green economy. Now, we understand there are a lot of definitions of what that involves, and we'll hear some, we've already heard today, some of the broader nature of what the green economy entails. So I'm looking forward to hearing from our co-panelists what their views are in their practical ways. But from our perspective, our lens is really from how do we marry the investment excellence that we have as a business, as an investment manager, with the responsible and impactful outcomes that we can achieve for our clients in doing so. Thank you.
Thank you very much, Rich. Thank you for that. And later on, we're going to get into the details of understanding how you go about making sure that those listed companies actually do the right thing. Yes, of course, you're one of the big asset managers in the country, but I'm sure it's not always easy to make sure that they do the right thing. So we're going to get into that in more detail. But let's go to Coca-Cola. Diana, you are responsible for sustainability across the continent. I know in this particular role, you're relatively new, but let's talk about Coca-Cola's role in contributing to South Africa's green economy?
All right, thanks for that, Andile. Coca-Cola Beverages Africa is an African-based company, so we are led and staffed in our 15 markets in 15 countries in Africa, and we are very much part of the global Coca-Cola system. And we have over 680,000 outlets across Africa, and we truly believe that sustainability is doing business the right way. Our mission statement actually states that we truly believe in doing business the right way, and sustainability is how we answer that. How we are doing our business currently the right way is we are making sure that the water that we use, as you rightfully said, which is our main ingredient, we are using it efficiently, and we are making sure that we are not doing that at the expense of nature, as well as at the expense of the communities that we operate in. And to top that as well, we are looking after our packaging, which is the waste. We really truly believe that a world without waste is truly possible, and I'll unpack that a little bit later. And we also embark on sustainable sourcing, where we actually farm our ingredients. We may want to make sure that that is done and distributed in a sustainable way. And obviously, we are doing all this by making sure that we are inclusively including all the populations that are marginalized in our communities. That is our women, our youth, as well as people with disabilities.
Great stuff. Thank you so much for that. I think for a business that is global, that is obviously operating in different markets, the issue of just transition and to what extent are global targets relatable or applicable to various markets is an interesting one. So I'm going to come back to you on that, because you are a global business. I'm very interested in how just transition is for African businesses, and I'm sure Rob will have some thoughts on that as well. Shabir, the glass recycling company, I promise I'm not the only person in the room who didn't know about it, so you're going to have to give us the whole spiel again.
Wow.
Tell us what you do. The name, the word is in the name, like the job is in the name, so it is a little bit there, but please give us
Great,
more.
thank you, Andile. Good afternoon, everyone. Hey, the glass recycling company, the name sometimes is confusing, because do we recycle the glass? No, we don't. Glass recycling company is a body, we don't recycle the glass, so I'll tell you what happens. We are an industry body. We used to be a voluntary industry body, or classified now as a producer responsibility organization. Our primary focus is to facilitate the recycling of glass in South Africa. This we do by having members including Heineken, Coca-Cola Beverages South Africa, and we have approximately 90 members. But the key focus is on increasing glass collection and placing the relevant infrastructure out there in the market to enable South Africans to recycle. Now, in addition to that, it's not only about placing the infrastructure, it's about creating awareness about recycling, because in particular amongst the mid to high LSMs, there's still high levels of apathy with regard to recycling. So we did not, to my first point, we did not recycle the glass. The glass is recycled by, as you would probably know, Consol Glass, which is now called ADA, Glass Packaging Africa, as well as Isanti, which used to be the old Unpack Glass. They are members of the Glass Recycling Company, also founding members, and they do the physical recycling of the glass. So our primary focus is to increase glass collections by placing receptacles, supporting entrepreneurs, supporting buyback centers, and also a key element in we're almost in existence for 17 years, so we have faith. Coca-Cola has been members, Heineken has been members for 17 years as well, but the more important thing is how do we really bring the lower income groups, and how do we contribute towards transformation? And what we've done as a business, with the support where a fee is paid by our members, which I will explain shortly, is to bring especially historically disadvantaged South Africans into the mainstream of the economy. Now, over the years, we have set up thousands of buyback centers. Some work setting up new entrepreneurs. It's not always successful. I'm sure my colleagues in business would also allude to that. However, we have many successful entrepreneurs, and the majority are people who were on a very low scale. They were even glass collectors, and we've brought them to run their own businesses, which are successful. Now, coupled with this in turn creates income generation opportunities for collectors, the people you see with the trolleys, the people you see in suburbia, in townships across the country, where people then bring their glass to these buyback centers where we've created a national footprint, and this glass is then sold back to the glass manufacturers to manufacture new glass packaging. And one of the important things about glass packaging, it adheres to the circular economy, and I'm sure you all now are aware of circularity, which is a big issue in terms of extended producer responsibility, which I will allude to later. However, in terms of that, glass is completely adheres to the circular economy principles where old glass packaging is used to manufacture new glass packaging. So if you look at these bottles here of glass, they have at least a 40 to 45% recycled content, and it doesn't affect the quality of the glass. But Andile, I think we'll go on later. There's so much to talk about the glass recycling company, but it gives you an overview of who we are, what we are. And just one final point I'd like to make. We are approved by the Department of Forestry, Fishery and Environment as an accredited producer responsibility organization for glass packaging.
Lovely stuff. Thank you so much for that. Let's move on to Heineken. You're a global brewer, of course, and similar to Coke, you have many responsibilities around packaging, etc. But you've got other responsibilities because you are a beer, which is slightly different to other beverages. But let's talk about your contribution to South Africa's green economy.
Yeah, so thank you for having us here today, Andile. I think in terms of Heineken SA, we're part of the global Heineken company. I don't think I need to tell you too much about our products. I think most of you should know that, and Andile knows that well. But what we really here today to talk about is what we do with that product. So it's not about just bringing quality products that people can enjoy and bring those moments of joy to our consumers.
Yeah.
It's about bringing that in an environment that's sustainable and that we look after the economies that we serve in. And so how we do that is we really do look at it from a kind of three-tiered approach. And we talked about how sustainability it used to be really an add-on to our strategies. Heineken has really changed how that is, and it really is at the core of our strategy. If you look at our global business strategy, it's the evergreen strategy, and it really delves down into, we put the sustainability under brewing a better world. And how we believe we can do that is not only just focusing, and I think a lot of the focus today has been on the environment and the energy. So we do look at that. We look at how we can reduce our water usage, how we can become net zero in terms of our production facilities, looking for circular opportunities in terms of reducing our waste streams. But what's also important is that we look at our social and our responsible aspects as well. So we need to have a look at how we include inclusion and diversity into our production, and that we service the communities that we're in. So it's very important that these are part of our core strategy. And as you mentioned earlier on Heineken, it's also very critical. We're in the beer industry. We need to have responsibility at our core. So we need to make sure that the products that we produce are used responsibly. So we really have to drive that throughout and make sure that there's always an option of a Heineken Zero or some other option that's a non-alcoholic beverage. So as much as we're Heineken, we also do offer the non-alcoholic, and it's very important for us to drive that. And so that's really some of the cores that we do to deliver. With our product comes the responsibility.
Great stuff, great stuff. So ladies and gentlemen, how I'd like us to have this conversation is just to focus on certain themes and how they apply in your various worlds. And I'm going to start with the theme of just transition. And Teboho, the MD at Hohm Mutual Investment Group, was presenting earlier on, and he had a case study of another corporate that if you think about the industry they're in, you can almost see the fossil fuels. It's very obvious. And he was making the point that, as an investment community, you can't just now stop investing in that company. You got to talk about how they're transitioning. Yeah. And I'm going to start with you, Rob, about what that means for you in the context of the South African listed market. Indeed, when you go and talk to a Cecil, your MD was talking about being proud of how the team had these discussions over years, and how the previous AGM, you guys were able to agree with all the resolutions. How do you practically do that? Because I could quite easily, as CEO, tell you, go and fly a kite, okay? This is how we do things here.
Well, I would say the operating term would be speak softly and carry a big stick, but we speak loudly and try and speak with the biggest stick as possible. So I'll just explain to you exactly how, and Teboho eloquently described our overall focus points of our stewardship strategy, the three big elements. That's with every company we speak to. With Cecil, yes, we've walked with them on a long journey from basically from 2014, 2015, where there was huge pushback and not getting the amount of traction that we deserved as to protect our investors' interests in terms of what we foresaw as being material risks to their business and their long-term business model, to a point where, right now, there's been basically a 180 acknowledging the fact that they have to transition quickly in order to keep that business going into the future. It didn't happen overnight. In fact, we were the first institutional investor and bringing along a whole bunch of other institutional investors to file a resolution at that company's AGM in 2019 because we hadn't seen the progress that we believe we deserved and that our clients deserved. So that was probably a first in terms of shareholder activism in the South African listed market, certainly by institutional investors coming together and saying this is a unique issue that we have to solve for and that all our clients are being impacted in the same way. So when we took that responsibility onto our shoulders, of course we had to navigate a whole lot of legal and regulatory requirements, but we found that the risk of us really getting to the core and getting the outcome that our clients deserve was well worth taking. And in actual fact, it has almost set the ground path for other types of shareholder activism, and we believe that and certainly we have seen since the establishment, as Bob also alluded to, some of these international collaborative associations like Climate Action 100+, where the world's top emitters are all being engaged in a similar way by a cohort of institutional investors from around the world, not just in South Africa. So, and I might add, across multiple asset classes as well, not just in listed equity, because it's important to acknowledge the fact that it's going to require collaboration, this unity that we've all been talking to. It's so crucial for us to get anything done in a meaningful way in our market and beyond for investors to come together and come with one singular voice, with one single approach, with one focus on the impactful outcome at the end of the day in order to drive that change. Because in our view, that is far more powerful and far more has far more results than us simply as perhaps only a 1% shareholder in a company where the board might say to us, no, I don't represent the majority, or we're hearing something else from other providers of capital or the like. When you hear from a far greater perspective, yes, then things start to happen, and they start to happen really, really quickly.
You would hope that, I was being facetious, of course, by the CEO saying I'm not interested, but you would hope that these businesses are wanting to run their operations in a sustainable way because they see the direct benefit of doing so. Not because the investment community is saying so, not because some climate change organization, pressure group is saying so. I myself, as the CEO, the chairman of a company X, I appreciate that that's what I ought to do. Are you finding that shift is there now? Because I do think decade or 2 decades ago, you guys would come into a room and say these things and you're a bit of a nuisance. Is there a shift now?
Yeah, that speaking louder and carrying a bigger stick. I mean, let me ask my co-panelists, because they're the ones who are, in many ways, evidence. I want to ask them the simple question. What is the financial impact of their sustainability strategies and how is it playing out in real time for their businesses? Coca-Cola, South Africa, was one of the first companies to install a huge solar PV project back in 2018 before we had this whole load shedding. Heineken has done this same recently with it's as a 6 megawatt, Richard. So, I mean, what has that meant to you in terms from me as our client, me as an investor, and our clients as an investor? What has it meant for your business's bottom line, in your balance sheets, in your income statements? How does that actually impact you in terms of financial performance?
It's a great question. Shoot. My co-panelist
jump.
has asked the question.
You want to go for it?
But that's what we're interested in, right?
Absolutely.
I think, and to your point, I think if you look 10 years ago, environmental was it was a green guy in the corner jumping up and down, and everyone was carrying on and
No,
talking.
they were like, can you keep quiet? We're making money here.
Exactly. It's about money, it's about productivity, it's about how do we get more money to our investors. However, and I think how it's changed is not so much the fact that it's now sustainability and the goals and that there's global commitments. It's to your point that it's now starting to hit the bottom line. So if you have a look at load shedding means that somebody has to run a diesel generator. As you mentioned, production can't stop, so we need to keep things going. So now your operating costs start to increase massively when you start running diesel generators. If you're talking about running a large production site, hundreds of thousands of rands in diesel a day. Now, it starts to drive the conversation a little bit more importantly, and that green guy in the corner his KPIs start becoming a lot more important than the other ones, because we're talking about the long-term sustainability of the country. And if we look at that nice graph of the UFO that's coming, it's just going to get bigger. So that the more we drive this, and that's more the necessity that's actually going to drive our business goals. Yeah. It's not so much the green targets and the ESGs that we have to deliver on. It's if your business wants to survive, you're going to need to do this, and the consumers are asking for it too.
I would imagine it's not very different for you, Diana. So while you respond to that, I'd also like you to share with me the water issue, right? You talk about electricity and load shedding. There is no Coca-Cola if we have no water.
Yes.
So yeah.
So yeah, and I agree with you totally that gone are the days where sustainability is a compliance issue. It's now the right thing to do. It has to be ingrained in your day-to-day business. Water is our key ingredient in our product. Obviously, as you rightfully said, if there's no water, there's no Coca-Cola. And we are actually now acknowledging how important it is to ensure the sustainability of that water, where we get it from. Water is a natural product, is a natural resource that we can't replicate. So it is coming from a watershed or a water basin, and we need to ensure that where it is coming from, we are ensuring constant health. We are checking on the health of that watershed, and also we are not doing that at the expense of the communities. That is, we are abstracting water and making sure that, taking water from the community. So we're ensuring that we balance nature and communities at the same time, and at the same time ensuring our continuity of our business. So right now we are focusing mostly on replenishment. That actually means taking back water to nature and taking back water to communities. So we are committed that by 2030, very ambitious indeed. We want to replenish 100% of what we use in our sales volumes. We want to replenish it back to the community and back to...
Say that again. I want to make sure I heard that correctly.
Correctly, yes. So it is a global ambition that we have signed up as Coca-Cola, that we want to replenish 100% of our sales volume, of what we use in our sales volume, want to replenish 100% back to nature and back to communities.
That's like the best definition of net zero. Even if I didn't know what net zero was, I get it when you say that. Okay, that's really impressive. That sounds like, wow, it's even hard to like comprehend. Shabir, let me come to you. I think recycling almost has a similar background. You know, when I was in school, our teacher had those bins with the different colors. And recycling was the nice thing to do. You know, you'd be like a responsible resident. What's that shift been in the world that you've seen in the time you've spent?
Yeah, Andile, thanks. The shift has been significant. And I will not disagree with some of my colleagues here, but I believe environmental legislation has pushed many corporates, multinationals and national companies as well, to start looking at sustainability and environmental issues differently. Prior to that, as Richard alluded to, it was primarily the bottom line that businesses would look for. So environmental legislation has opened up a whole new sphere. I mean, the green guy in the corner is, as Richard has said, is not that small. He is rather, or she is, a significant cog in the wheel of any large corporate, and including multinationals. So I believe legislation, and I'll talk about extended producer responsibility, which has been implemented in Europe, for argument's sake, about 25 to 30 years back. It's changed the mindset completely and changed the way that corporations or producers or brand owners do business.
Tell us about it.
So what has happened is, I mean, let's look at what extended producer responsibility is. In very simple terms, the OECD defines extended producer responsibility as an environmental policy in which the producer takes and the extended responsibility of their product at the end of its life cycle after the post-consumer stage. So basically what it means, once this bottle is empty, it's finished, who's placed it on the market, whose responsibility it is.
Got you.
Before the brand owner or the producer would take no responsibility.
I've sold it to you, right?
Now I've sold it, I've done my job, I've made my money, which was my only intent.
Yeah.
But now I, as a producer, need to take ownership.
Got you.
So legislation has certainly changed the way businesses have thought. And the positive spin-off from that is businesses have realized that sustainability also gives significant benefits and advantages to a business by complying with. So it was a bit of a stick approach. And in South Africa, extended producer responsibility is very new. It was promulgated as legislation in 2021, and the first year of extended producer responsibility kicked in from 2022. It is completely new in South Africa. The regulation sets specific targets on producers in terms of collection rates, in terms of transformation, in terms of many objectives which need to be delivered. But the important thing is to divert more packaging, in our case, glass packaging from landfill, and use that in particular in line with the circular economy, which I mentioned earlier. So what legislation has done is, and it is concerning for argument's sake, the department has passed the legislation, which is national legislation, it's law. And many producers, not our producers here, but many producers have not complied with the legislation. We have members of the Glass Recycling Company which represent 80% of glass packaging placed on the market, or 85%. But the other 15% are hiding behind curtains. And they haven't come to the party. But people, if you're a producer of glass packaging and you place it on the market, or any paper and packaging, and you place more than 10 tons of packaging on the market, the fines are horrible. I don't look good in orange, but let me get to that. You could be fined, you could get a maximum of 15 years imprisonment, or a combination of both. So those who are non-compliant, my plea to producers who are non-compliant, people, you need to comply, you need to register with the DFFE, you need to join a producer responsibility organization. Us as the Glass Recycling Company, we have other producer responsibility organizations for paper, packaging, and metals as well.
Right.
And plastics, obviously. But people need to comply. And this legislation is here to assist industry to increase collection rates and be more sustainable. And coupled with this, because South Africa has a unique situation, it's also, transformation is a key element of extended producer responsibility. So it's changed the way, and what does a PRO do? I'm a PRO, I represent a PRO. Our core function is to take the responsibility of EPR from our producers and address all the EPR activities and meet the relevant targets that are prescribed in the regulations. Or Heineken could run their own scheme, but there are economies of scale if you work for a body that's doing it for all the different producers. And we are the producer responsibility organization,
what's
glass packaging.
What's driving the non-compliance?
People don't want to pay the money because you need to pay an EPR fee. And let me go back a step. Also, the benefit of the EPR regulations is we had voluntary producer responsibility organizations. We in South Africa have been functioning as a glass recycling company for 17 years as a voluntary initiative. It now has become mandatory to belong to a PRO because of the EPR regulations, but everyone were not members when it was voluntary. Now they are forced to be members. So people were free riders, and one of the problematic areas has been importers bringing in packaging into the country and not taking responsibility at the end of its life. So guys, if you bring in packaging, the good days are gone because we as PROs will be reporting non-compliant producers we are forced to report non-compliant members with the DFFE, and orange could be the color of the day.
I get it.
Great.
Even I get it. I want to go back to the Heineken water case. because this issue of water for the two of you is a big one. Diane has said a few points from her side and a very big commitment and stat. How are you doing at Heineken?
So from water, we also look at it from, once again, always in three. I don't know why strategies always seem to come in three, but we look at it from three aspects. And the first is around efficiency. So it doesn't help to be focusing on trying to secure more and to do more without being more effective in terms of how we operate. So in case you didn't know, to make 1 liter of beer, it can vary as much up to 4 to 5 liters of water to produce 1 liter of beer. Now, the global benchmark in terms of the best in the world is kind of around 1.5 to 2 liters to make 1 liter. So as Heineken, we've made a commitment as a water-stressed country as ours. We need to get to a point of reaching at least 2.6 by 2025. So that's really around looking at how we're more effective, how do we use water less, so spraying the floors, cleaning, how do we be more effective in terms of our cleaning. But we also use water reclamation. So what that means is our wastewater that goes out, we retreat it and we filter it, and then we use that in non-product touching water. So we use it for cleaning of tanks, gardening, things like that. So we really try to get our efficiency down. Once you've then got the efficiency down, then we look at opportunities for circularity. So circularity is really key to our drive and in terms of our strategy. So we then try to look at our waste streams, the water that we let go, or we discharge to the river is of good condition. So what other industries can then maybe use that water so that they don't have to use it from Rand water, they can use our wastewater stream that's going through because it's of good quality. So we look at then circularity options and how we can then reuse that water. And then lastly, we also have around stewardship is around putting the water back. So we fall as part of the Vol Basin, so that's the water that supplies our brewery. And so we have a commitment that for every liter that we use, so we then have to put 1.5 liters back into the watershed. So how we do that is by removing alien plants, so things that use too much water, sorting out soil erosion, putting water back into communities, fixing up. So we need to put water back into that watershed up to the same amount that we're taking out.
Right. So Rob, this now gets us to the question of everybody's doing their bit. Everybody's got their own strategies. But I've still yet to see a benchmark. So I haven't seen anything that says, this is the framework, this is the benchmark. If you meet these requirements, you're doing just transition, or you're doing transition in a just way. If you don't, you're behind the pack. How do you, as an investor in the listed equities, benchmark them to the extent that we don't have one?
Thank you for that great question, Andile, and luckily we have the answer to that. We do have an assessment framework, exactly to the point. I mean, Tebogo alluded to it as one of our key goals, and the way it is not to say, oh, you must have a just transition. Yes, it is that, but we want to see how you're going to do it. We want to know that you acknowledge that it is one of the big issues for you. It's one of your most material risks. Number two, we want to know that you've actually there's a commitment to change. That's not just acknowledge the problem, it's a commitment to change. And number three, have you engaged with your stakeholders around this particular issue? Have you found out exactly how many workers will be impacted by your move to renewable energy, for example, as a feedstock versus coal? And finally, is there a target that what you've set that we can monitor year after year to ensure that you are actually on this track and you actually are performing and you are meeting those goals that you have set yourselves? That framework, and while we are pulling together various sources, we have the benefit of various sources of information external to ourselves. We are marrying that with our own deep dive stewardship of those particular companies, and we're putting together this framework that gives us an important lens into exactly how well these companies are doing. Now, why is this so important? Why are we going to the effort? Yes, we are going to the effort to drive impactful outcomes and impactful change. But hold on a second, we've made a commitment too. We've also committed to net zero, right? We can't say in our net zero commitment, oh, well, we're going to commit to decarbonize in our portfolios, without actually the companies that we invested in themselves having set their path and set their strategy around net zero and the just transition. We know that we can only work together with them to get this right because we have made the same commitment ourselves. So therefore, our interests are very much aligned in terms of getting the job done. So what becomes very important there is the data and the back-end data and the evidence that we have to show that as our companies and as our top emitters go through the just transition journey, so too as ourselves, our assets under management are doing the same thing. And therefore, it's so important for us to have meaningful and be able to track it over time in a meaningful way.
Related to that question, and I'd like to ask, you guys, around the human capital that's required to drive these businesses through this transition. If you look at boards, listed companies, if you look at committees, audit committees would typically have a retired audit partner or CAs, and that makes sense, right? They're involved on the numbers and the annual report and whatever. That's why you must have CAs there. I'm yet to see social and ethics committees being full of people that are actually well qualified in matters of sustainability. So do you guys think that we have enough capacity and capability of real professionals who are as qualified as you are in driving these transitions, or it's still to some extent seen as an ancillary skill where you have a lot of community type people in these committees, but they're not necessarily experts at transitioning?
Yeah.
Huh?
Yeah, I must say a new dawn has come where when I was studying, I never thought I would be having this kind of conversation in a boardroom or in such a huge platform. But
how come? Why would you not have thought?
Well, because at that time, environmental science, it was something that was seen as a good to have, or you're a tree hugger, or something like that. The real change was not rightfully quantified. But now at this point, as I said, a new dawn has come. If you hear our CEO, for example, when he speaks, he understands what recycling is. He understands what a PRO is. He understands what the target should be and what the right packaging of a particular product should be. So it is a discussion that is not just a bullet point for a certain committee. It is a discussion point that is now taking a central point in as much space as the financial discussion is taking. So I would like to think that, particularly on waste on our side, it is a very big priority, on water, on decarbonization, on sustainable sourcing and economic inclusion. Those KPIs are gaining so much momentum that it actually is becoming everyone's KPI, not just the sustainability department, not just the PACS department, but every single person. It requires all hands on deck. So yeah, a new dawn has come, actually.
Andile, may I jump in from being the investment and assessing the companies and their boards and the board effectiveness of the other companies that we invest in as part of one of our key areas of our responsible investment practice. Dana's point is about a new dawn. I think there is a new dawn in the executive side of the business. What we still need to see that dawn be that for the sun to rise on that new dawn on the non-executive side of the business. And to your point around social and ethics committees, I mean, I'm still surprised, for example, that we haven't shifted the statutory name for the social and ethics committee to the sustainability committee. Why hasn't that happened yet? And I think a very good reason is that they're not enough yet individuals who are as well qualified to talk holistically around integrated thinking, around the key sustainability issues, which we have alluded to today, and are sitting at the board level and marking the executive team's homework in a meaningful way. In addition, I would say that we have yet to fully define and properly incorporate sustainability metrics into our executive remuneration policies. It is happening, and ESG metrics are coming out of the woodwork, but in many cases, from where I'm sitting, and don't necessarily link to the sustainability strategy as is stated specifically in those listed companies. And I'm not talking about our colleagues on the panel, but this is a general overview of what I've seen on the market. And my stretch for boards is that to the extent that you're saying, well, we can't wait for someone like Diana to reach her golden years of her career and then join the board and become an expert on sustainability. To the extent that you don't have those individuals currently on your board, it's your obligation as a fiduciary duty to your company to deal with your sustainability risks and opportunities for that matter, to upskill yourselves, to train, to learn, to have the discussions about what it takes on the ground from the executive teams to get the job done, and find a way to formulate the sustainability strategy that drives the outcomes that we're looking for.
Absolutely, absolutely. Shabir, I'm interested in your take.
Yeah, very interesting. I mean, yeah, I think what's a challenge as well, Diana mentioned as well, you know, you can do environmental science or what, for argument's sake, at a university or a tertiary institution. But I believe sustainability issues, I mean, as you have a chartered accountant who's a professional, you have a specialist or...
There we go. There we go.
They should have had this during
the irony.
Ladies and gentlemen, I think that deserves a round of applause. We're going to have to speak a little bit louder. I don't have that problem. I don't know about you.
No, I don't have that problem at all.
All right, let's just try and keep it quiet in the room and try and raise our voices.
I believe, you know, you have professionals, chartered accountants, chartered financial accountants. In the medical field, you have specialists. But what's really lacking, we need to look at our education system as well. And sustainability, I mean, many institutions, there is a lady from Gibbs as well. There are courses, but I believe it needs to become a profession. And we don't have that, not only the world over, but more so in South Africa. And we have people will then look at it because currently, as Diana said, it used to be tree huggers, greenies. But I mean, I evolved as a proper business person, working through, I mean, I used to be with ArcelorMittal, previously to sustainability issues. But I evolved into it. But if there's proper formal training and a formal qualification, I think it will also make a big difference where there'll be a supply of the right people, because there's very few of us currently into the corporate structure as well. So I think our lady from Gibbs as well, it's a plea to you and also other universities as well to make it something real. And I think we as professionals in the sustainability sector need to push that and look at push that with educational institutions as well. So I think it's going to be a two-way process, I believe.
Absolutely, absolutely. Did you have the same experience at Heineken?
I fully agree. I think if I look at the technical skills that you need, we talked earlier, I think Carl mentioned earlier, that we need to educate people. So that a lot of businesses get a proposal thrown on their desk saying, oh, here's a nice solar PV solution for you. However, that they don't know what's involved in that. Is that a grid-tied system? What kind of panels? There's a lot of technical aspects that you need to take into account. And how long is this going to last? What's your payback period? But also there's a lot of different technology out there. So we've talked a lot about solar, but there's heat pumps, there's biomass boilers, there's all these different things that we need to get people aware of. And if when you start talking about tons of CO2 emissions per hectoliter, the board switches off because they don't know what you're talking about. And the truth is, you're trying to drive these goals. You're saying you give them a goal, but they don't understand what that goal is.
That's a problem.
It's very important that we get those in. And like you said, you need that technical skill to come through. Because the truth is, sustainability is not a one-size-fits-all. You can't just take what works in Netherlands and put it in South Africa. It's not the same. Yeah. I often get asked, oh, how come Ethiopia is net zero? And I'm like, well, they have hydroelectric power. But they're like, it's Africa, it's the same. I'm like, well, it's a very different context.
Yeah.
And so we really need to appreciate that South Africa is different from elsewhere, and therefore you need somebody who's going to then take the best fit for us, and that we can really take that net zero. We talk about those plans to get to net zero. In South Africa, it's a challenge, and you need somebody who really knows the technology and who can apply that.
Absolutely.
Convince people to get the capital investment and push behind it.
I want to come back to Shabir and Diana on the last element before I open the floor, I wanted to just talk about, and that's the inequality. I think, Rich, you touched on it with your question that you asked about Ethiopia, that in all of this transition, in all of this strengthening and moving towards a green economy, we have society that we need to take along. What's been your experience in us addressing just the fact that we have a society that we have, particularly in South Africa? Gini coefficient was touched on by the MD in his opening address. How do we do all of this stuff around climate and around the environment and around recycling, but also find ways and means to make it inclusive? How do we do that?
Okay, I can start.
Ladies first.
Okay, it is. I think it comes with the social responsibility for a company, right? And the African nuances or the African environment is a little bit different because our communities literally depend on us. In their livelihood are crafted by corporates, by business, by government, and so you can't help ignore that you have to encompass their needs. At Coca-Cola, how we do it is we have to make sure we actually ensure that in the whole value chain, from how we produce our ingredients, we are incorporating female farmers, we are incorporating women suppliers, we are incorporating women recyclers, women waste pickers, and when we do these collaborations and these partnerships, it's an intentional mindset that we have to make sure that we include women empowerment, we include youth development, because obviously we know that the unemployment rates are actually quite high, and mainly in the youth range. And we want to ensure that whichever intervention that we are doing within sustainability, we are taking into account the youth development as well. So in the waste space, you will see that most of our partnerships that we've got, we are partnering with women suppliers, we are partnering with small, medium enterprises who actually have some mentorship as well, programs as well, to ensure that they are educating or upskilling the youth that we've got, to ensure that we develop their employability as well as improve entrepreneurship within those demographics.
I like the point about developing their employability. One of the business leaders once said something that, as a country, we don't have an unemployment problem, we have an unemployability problem, in that we don't have the requisite skills that the market is looking for. Subir, your initiatives?
Well, at the Glass Recycling Company, over the past 17 years, our focus has been primarily on disadvantaged communities, and a lot of outlying regions as well, where there was no facilities for them to get their glass collected, to get back to the recycling facilities. So our focus and our support as well, over the past 17 years, in excess of 75% of our support has gone to SMMEs, primarily.
How much percent?
75%.
Wow.
Of which majority are black-owned businesses. So transformation is a very important aspect in terms of our EPR scheme, which is new now, but 16 years back, before we had EPR, it's always been the issue. And I'm proud of also creating income generation opportunities to women, to recyclers who are disadvantaged, who didn't have any form of income. So I believe it's not just only the Glass Recycling Company, but the entire packaging sector in South Africa and the manufacturing sector. And I'll touch on something which is slightly off topic, but I think it's very important. In South Africa, before we had any regulations, all paper and packaging placed on market, more than 50% was collected. Now that compares with some of the best countries in the world without legislation. Now how did that happen in South Africa of all places? Because the manufacturers of packaging have spent not millions, but billions of rands into beneficiation and recycling facilities. And this has created income generation opportunities for communities where they didn't have any form of income. So it's really been beneficial. For argument's sake, when the Chinese put a ban on imports, the European Union and the US were in big trouble because all they were doing is collecting material, declaring greenwashing that they were recycling, but they were dumping it in China for recycling. China put the stop, called it Operation Sword, and these guys' recycling initiatives came to a standstill. They had hundreds of thousands of tons of recyclable material in warehouses where they had no end-use market. In South Africa, the industry has developed end-use markets. We were not affected by the Chinese ban, and it was business as usual. Now, one can see the downstream effects, if we didn't have that, on people who collect glass or other packaging to earn a source of income, which is, it's them, it's the SMMEs, it's people across the value chain, which our industry has negated that problem because it's very well advanced and developed. And that is without any legislation in place.
As a matter of interest, the guys that pull the trolleys, they typically would have paper, a lot of cardboard I've seen. Some would have the plastic packaging that you guys would use for your water products and stuff. I don't often see them carrying glass. Is that because it's heavy or it's done differently?
They carry glass. It depends on the area as well, but you won't see it. It's normally at the bottom because it's heavy.
Okay.
But a large percentage of all recyclables are brought by collectors. But not all recyclables. There is a misconception that all recyclables are picked up by waste collectors.
No.
I'd like to just, it's not all the volumes, but it's a fair volume that comes to.
And they make a healthy living from this?
Well, indeed, how long is a piece of string? If you pick up one bottle of glass and one bottle of PET and one Alu can, you're not going to make a good living.
Yeah.
It depends how hard you work.
Got you.
But what has happened in terms of EPR regulations, we as PROs are now forced to pay a waste picker service fee.
Okay.
We comfortable
Waste
that
picker is the guy
is the guy with the trolley or the lady with the trolley, and they will get paid X amount per kilogram over and above the price they get paid as well.
Got you. Which creates the economic opportunity.
Well, they're getting now reimbursed for their services.
I see.
A fair reimbursement, yeah.
Say again for me?
No, I'm saying a fair reimbursement because right now the pricing is a little bit imbalanced.
And pricings for recyclables fluctuate. It's supply and demand, like any other industry.
Rich, before I move from the point of inclusion, the other difficulty for very big corporates in procuring and managing their infrastructure and their production lines is that, big companies like working with other big companies. Let's just face it, it's a lot easier, right? Like, just hire big company X to do all the stuff. They got the capacity, they got the balance sheet, they got the vehicles, they buy the vehicles, they got employees. They're not going to have problems. Just give them the contract, and of course they got volume, so you even get better prices. Big corporates struggle dealing with SMEs. They really do. And by definition, it's not easy, but also, the commitment to do it is to some extent driven by regulation and things like PPP, ESD, etc. How have you guys kind of done it at Heineken? That balance between, a factory manager or a procurement manager going, it's just easier if I just get these guys, and procurement and sustainability department saying, no, we need SMEs, we need black women owned, we need etc. How do you balance that?
It's a big challenge, to be honest. If we look at a global company like Heineken, we have global procurement that really tries to negotiate on a global level. And I think to Shabir's point earlier, that's where legislation has somewhat helped us, because that by having BBE regulations in terms of having so much sourced locally, that does help our procurement guys to then have discussions in terms of why do we have to source from something on the other side of the world when we can source it here locally.
Right.
So I think legislation has really helped, but it also helps in terms of, exactly to his point around greenwashing, sending something to China, then when things go wrong, then suddenly things get cut off. So it's very important to be able to support the people around and your local community and local infrastructure. So Heineken's very involved in the glass recycling and really getting down to the guys that collect these bottles out in trade. And as you said, there's the big players that collect, but there's actually outside the informal liquor market, the shebeens and the taverns, there's guys that go there and collect, because a far amount of our market is returnable bottles, and that comes with a deposit value, and therefore there's quite a strong economy to make sure that glass gets back, because there's a deposit value to it. However, there's a lot of non-returnable bottles out there, and that's where that informal market comes, where the guys then go collect, and as you said, you don't see them drilling because they crush it into those bags, and they're rather heavy by the time they have to pull them. But there's a whole economy there that's and people survive on that. And what's good is that this program that the glass recycling guys are pushing is that now it makes it a little bit more economically viable for them to do that. Because it's hard work, it's heavy. And so it's important that you do that, but also it's also important from us, from a company, to also try to drive renewable and returnable bottles and to try to drive that market. Because unfortunately, the non-returnable glass market isn't good. So it's nice, it's convenient, but the returnable has got an infrastructure and that really does help the economy and also help in terms of the glass.
Thanks for that, Rich. Rob, how do you do it on your listed companies? How do you get them to do the right thing on inclusion?
Let's actually, we've got a very strong program around focusing on inequality as a theme. Again, it's something that we look into in a real way, going and deep diving into gender and racial pay gaps with in the investing companies. There's a lot of data out there in terms of how people actually get paid. It's very confidential data, obviously, and a lot of it, even on an aggregated basis, doesn't necessarily see the light of day. But what we are doing, we are encouraging and in some cases demanding our companies to disclose what are those gaps. And what we've seen, it's not as a simple, what everyone sees as a wage gap between the CEO and, say, the lowest paid member of the organization. Wage gaps and gender gaps and racial gaps, and for that matter, abled and disabled gaps exist across bands, across different, and what we encourage companies to do, you get in that data from your REM consultant or your HR department, or whatever. Use that data to achieve an outcome, set goals for closing those gaps where they do exist. I will say something else. It's all very well to us to go out and, again, carry our big stick into the market. But it's also to look at ourselves internally in terms of what we're doing as an investment manager in order to advance people from a gender and from a racial perspective to advance within our own organization, to take over the management of our clients' money, to look at executives and senior positions and ownership and on a broad-based basis in order to achieve the results we want, what we believe in terms of true transformation of our own business. So it's all very well to go out and be very judicious about ensuring that our companies that we invest in have these goals, but by the same token, so too should we as a business live in a similar way.
Lead by example, indeed. I'm going to open the floor now to the audience. Ladies and gents, please feel free to pose any questions or make any contributions to the conversation we're having. We do have a couple of minutes to take a few questions. Can we start with the gentleman at the back, and then we'll come back to the lady, just to give him a chance. Thanks.
Thank you so much. Well done for all the good presentations. I just wanted to find out, waste recyclers, informal waste recyclers, if you look at the ESG metrics and you dive and you think more about the supply chain part of it, I don't know how corporates have been looking at the informal recyclers as part of the bigger picture, whether what they see, which we see every day on the road, with these guys carrying very big brands for recycling, and by default, they are part of the value chain for these global companies. In terms of benefit sharing, whether it's through pricing of the materials that are being recycled, do they feel that they are doing enough? Are these good stories to tell? Will they be happy if we take the pictures of these guys and put them against their names? So that's really, I just wanted to...
Okay. Yeah. I think the most qualified person is Shabir.
Yeah, I'm glad. Very, very good question. And it's how the public sees it and how we as industry see it, for argument's sake. I won't talk just about the glass recycling company, but producer responsibility organizations as a whole and industry as a whole. We have a producer responsibility organization alliance where all of us for paper and packaging are part of this alliance as well. We've been engaging with waste pickers, Arrow, the African Reclaimers Organization, as well as SAPA, the South African Waste Pickers Association, well before legislation. I've been dealing with SAPA, for argument's sake, for about 15 years now. We understand the challenges of waste pickers. We know the challenges of waste pickers. We work together with them. We work at grassroots level. It's not, we look at our members, I mean, they don't have to directly get involved. We as a producer responsibility organization engage with them. We are currently in the process as industry in terms of agreeing on the service fee. It becomes a negotiation. Do I get 10 Rand a kilo, which is not sustainable, or do I get 10 cents a kilo? We have settled on a number for 2022 going on to October 2023. We're also looking, I can give you a specific example in terms of integrating waste pickers into the collection systems. Now that can be fairly challenging because there's municipalities who are involved there. The city of Johannesburg had huge problems with, or not problems, not a great situation with the waste picker representative organizations because there was no engagement. Now, I think the biggest thing what we do from industry is to engage with waste picker representative organizations, see what their challenges are. They must also see what businesses' challenges are as well. We also have our challenges, we also have our constraints, but the important thing is we work together with them. I'm just looking now at the glass recycling company. Yesterday, we had a tuk-tuk. I mean, this is a pilot project we're doing, delivered to us, which is a little, to get waste pickers. We're not going to take all waste pickers, it's impossible. But to uplift waste pickers, I believe that's an important thing. My late friend, who was a head of South African Waste Pickers Association, Simon Mbata, who was passed away tragically a year and a bit ago, he used to tell me, Shabir, I don't want to work for you. I don't want to work for a municipality. I want to be uplifted in the value chain. So what we as industry are looking at, and I'll get to the tuk-tuk issue now, is to see how we can uplift waste pickers. We don't want a person to be a waste picker forever. We want them to become SMMEs, to run buyback centers, to get into beneficiation and recycling plants. Now, the legislation also stipulates that, and that's going to take time.
Yep.
However, we've bought a single tuk-tuk, fine, as an example, where we're going to take a waste picker, either from Arrow or Saupa. He or her will be selected to drive that vehicle and service the hospitality industry, and they will become independent businesses as well. So there are numerous, I'm just talking about the glass recycling company, there's numerous options where we are looking at integrating waste pickers, and it's not just paying them a waste picker service fee, it's to integrate them formally into the economy. And that is taking time, but we are working with them, and we recognize their contribution towards the waste management sector.
Brilliant. I'm so glad you're in this panel, Shabir. There was a lady, this ma'am, the lady in the red.
Thank you,
I note your hand, sir.
Thank you, Andile. You've raised an important issue here on procurement, that most procurement, it's limited to corporate procuring from corporate. And we are sitting here as farmers who are emerging. And I'm posing my question to Coca-Cola and Heineken to say, of your localization, what products do you have available for farmers who are emerging, women-owned businesses, and women who have youth that needs to be empowered to actually go out and be farmers as well? So what products do you have as the local products? Thank you.
Got it. I remember Coca-Cola had a Mintiro program where I think it had something to do with farmers, but I might be wrong.
Yeah, I did not hear the question fully.
Okay, I can help you. So she's asking, she's an emerging farmer. She's asking between yourself as Coke and also Heineken, what kind of product lines or products or ingredients or anything that you might procure from local farmers that you use in your value chain. In short, what are the opportunities in your world for emerging farmers? That's
okay. Okay. Well, Paul, the opportunities are quite endless, I would think.
He said endless. I heard endless. That means a lot of money.
No, obviously there is a vetting process in place, but in South Africa particularly, we do have an allocation X% that we have to allocate to small businesses and also farmers like yourselves. And in terms of product, I can't name one for sure because we do have a large variety of ingredients, a large variety of products that we use in our value chain. But in terms terms of results, I'm sure for CCBSA, which is South Africa, Coca-Cola Coca-Cola Beverages South Africa, the results speak for themselves because they've been doing very well in terms of empowering women and making sure that we actually just work with mostly with women-led suppliers. So yeah, I'm happy to talk after this and understand what your value add would be and give you more information.
Good. Yeah. So from a Heineken point of view, our raw materials for beer are quite specific. So it really is around malt and hops. Now in South Africa, there hasn't been a massive market in terms of barley, and unfortunately, our competitor has somewhat had a monopoly over the years for that. However, it's been very important for us to develop that. So I can quite happily say that we are busy with investment, and it's actually been signed off with the board for a local malting plant to be built with a global company called Soufflé. And what we're then doing is we're going to produce all our malt here in South Africa. And as part of that, we've got an emerging farmers program that we're working on. And what you can do is apply to be part of that. And what we do is we provide not only the seeds to get started, we also provide the skills to be able to train and upskill the farmers to be able to not only farm the barley, but also to the required level that we do. And we also help not only, like I said, financially, but also from the knowledge point of view. So it really is important for us to do that. And that's like I said, it's a very large investment that we are doing. And the next will be obviously to now look at hops and other raw materials that we can. But malt is a large amount of our raw materials.
It's brilliant because it also deals with you not having to import. So, you're growing the economy using your balance sheet to establish kind of the majority of the infrastructure, and then you're bringing on emerging farmers to plug in. Without big business and without clients buying your beer, like me, you wouldn't be able to do that, right? Sure. And the small farmer wouldn't get the opportunity. So it just makes so much sense. Thanks for that.
And decreasing your carbon footprint, transporting it thousands of miles.
Decreasing your carbon footprint too. Yes. I think we all need an A+ on this panel, I'm telling you. Smart people. There was a hand around here. Yes. Yes, sir.
Good afternoon, ladies and gentlemen, the panelists. My name is Adrian Maloney. I'm from a startup company called Shopperpolitan.com. We are an e-commerce marketplace for the township entrepreneurs in Soweto and Kailicha. We at Shopperpolitan want to disrupt the township economy, where we build our own open source software project where we provide poverty, inequality, and unemployment as an operating system. Why? We want to disrupt the taxation in South Africa and in Africa, where we tax the user-generated, i.e. the user, and also the OEM or the platform economy, that provides these platforms. The reason for this is I've listened today, and I said to myself, at the end of the day, we need smart recycling tax, where at the end of the day, I, as a recycler, I get taxed on what I buy from the likes of Coca-Cola, from the likes of Heineken, okay? And when I recycle, I need to be taxed. Because we all know, once you get taxed, okay, that's an income for the government. And at the end of the day, that income can create jobs. And we would like to fund this initiative with ESG. So I know there's a lot of people in here playing in that sector. Because at the end of the day, in South Africa, we are rich with two natural resources. We are rich with a Gen Z population that is extremely tech-savvy and that is young. Okay? And our continent numbers are 1.3 billion, So at the end of the day, we need to relook at taxation, not only from a government level, but also from a corporate level. And we would like to develop that software where, at the end of the day, when you recycle, you get taxed at the user, as well as whoever supplies whatever I'm buying. So at the end of the day, that's how we're going to solve all of our problems. Thank you very much.
Your name again, sir?
Adrian Maloney.
Okay.
From shopperpolitan.com.
Lovely. The man has done his pitch. Okay? If you've been listening, that's the man to talk to. Please support him if you are interested. Yes, ma'am. You are on.
Okay, my name is Khunti. I'm Adeniran. I think earlier on, Tebogo mentioned something about the pressures that we're getting, the global pressures around the issues of sustainability and
Yes.
ESG. And I'm partly a researcher and an academic, and I would like to perhaps implore the corporate sector. I know that earlier on the ball was passed on to, to the universities, but as someone that works with the universities, I would like to really implore the corporates to engage with the knowledge economy to create centers of excellence. And the reason why I'm saying that is because there was a lot of mention around issues of skills around the sustainability industry. And the only way for us to breach that gap is if we produce research articles, if we produce centers of excellence that would specifically focus on sustainability issues and making sure that the skills translate to the ground. And I think the other thing that I wanted to perhaps pose to the entire audience is a thought experiment around grassroots translation of the just transition system. A thought experiment such as if you had 1,000 plus labor force that you had to employ at grassroots level to do just transition programs, what specific work activities would you give them that are aligned to the sustainability industry and sustainability economy?
Right.
Thank you.
Thank you so much, Quincy. Thank you so much. I think your challenge, it's a good thing Tebogo is still in the room. I can see an Old Mutual Investment Group research something at some university. It's bringing us annual research on matters of sustainability. I see it. I'm going to take one more, and he's nodding, so you're not far off, Quincy. I'm going to take one more question. Unfortunately, we are running out of time. I'm already 5 minutes over lunchtime. Let's
Thank you
take
so
one
much.
more.
To Old Mutual, you spoke about how the green guy in the corner has moved from being
Please bring the microphone.
Yes, sorry. You spoke about how the green guy in the corner has moved away from being someone who's overlooked and not so important. Now, how does Old Mutual, or how do asset managers support the work of the green guy in the corner, as well as enable him to better check the homework of the corporate boards and everyone else?
Yeah.
In addition, how can asset managers make and enable the green guy in the corner to effectively connect the incentives, benefits, and bonus payments around for board members to ESG objectives without and alleviate the risk of greenwashing? Thank you.
Before he answers, I must say that the one thing asset managers have done, certainly my own observation, is that they've moved the green guy from the corner. The pressure from the investment community globally has moved that conversation of being in the corner to being front and center. The rest of the intelligent question, I'll leave to him.
I had nothing more really intelligent to say. Andile, you kind of stole my thunder there, but I was going to say that green guy in the corner is now sitting in the corner office.
Yeah.
So, just keep the thing about it is actually to build up the next generation. And big part of my team in heading up the team for responsible investing is that despite us having been in this game for a very long time, having fought the battles, have got the scars, have got our bloody noses from time to time, we've also brought one of my key focuses of my team, and one thing I'm very, very proud of personally, is that we've brought up the young junior analysts. We've brought in the university students post their studies to come work with the team, even if they have no understanding of sustainability whatsoever. Some of those individuals have been with our team through the graduate acceleration program into the junior analyst role. Now have become research analysts in our investment team, and so too are we putting our green people in the corner in all across our investment business, so that they can be our carriers of our message into the ways our investment teams do business. And I believe that's the way we have created this culture and created this professionalization. I will get onto it, not in a great deal of depth, but it was alluded to earlier. The professionalization of sustainability, having an association, a chartered or certificate on sustainability, on having the credentials to speak to the topics, on creating networks, like in events, like ourselves. Today is unusual in the sense that I'm not preaching to the converted in some respects. Some people here are not sustainability professionals. It's good that that's the case, because we're growing as a profession. We're growing in terms of the skills that are being developed. We are partnering with our academic institutions and other stakeholders in order to ensure that as many green people in the corner get to the corner office as quickly as possible. Thank you.
Wow. I think on that note, ladies and gentlemen, please join me in thanking this wonderful panel of sustainability professionals. Let me remind you, my immediate left is the Head of Responsible Investment at Old Mutual Investment Group, Robert, the Group Head of Sustainability at Coca-Cola Beverages Africa, Diana, Shabir, who runs the glass recycling company, the CEO there, and on my far, far left, the Strategic Projects and Sustainability Manager for Heineken South Africa, Richard. Thank you guys for all of your time and your insights. A round of applause, please.
Thank you, Andile.
Thank you.
Well done, guys.
Ladies and gents, I'm going to stay seated here and just wrap up the morning. Thank you so much for everybody for joining us. That's how we've come to the end. I want to thank all of the partners for making the event possible. Tebogo to you and your team at Old Mutual Investment Group. Thank you so much for bringing us all together. All the associate partners that were part of the panel that was run by Tash. Thank you also, Tash, for your panel and running it so well. As per usual, we expect nothing less. Thank you, ma'am. And also the partners that are part of this panel. Thank you for giving us the opportunity to have these conversations. It kind of feels like you're in the beginning of a really exciting industry, a really exciting move where the world is a lot more than just what do we take out of it, more about how do we look after it, how do we give back, how do we include more people. And I'm really touched by the conversation around the skills of sustainability, professionalizing it, bringing in the universities, bringing in the research capabilities, bringing in the skills at boards. I sit on many boards, and I'm so happy what you said earlier. My next board meeting, I'm going to ask the set committee members, how many of you are qualified in matters of sustainability? And if you're not, you should just go and do at least a short course. But you can't be sitting there saying you're responsible for this stuff and you don't even know. Because that audit, I can point all the CAs, right? And even they get it wrong. So there you go. So really, really thank you for putting it all together, and thank you for all your insights. And guys, please have a productive rest of the day further. Thank you for your attention.